because of Kotak Mahindra Bank's results that have just come in. And what we're learning is the net profit figure is coming in close to 3,280 crore. This is as opposed to about a 3,497 crore estimate that NDTV Profit had. Gross NPA ratio slightly, marginally higher from 1.45% to about 1.48. Similarly, as far as net NPA is concerned, from 0.31 to about 0.34%. So those are the quick changes that have happened in the numbers. I'll get in Sunny Agarwal of SBI Cap Securities to join us on this conversation. Sunny, welcome. What do you make of the first cut of these numbers?
Good afternoon and thanks for having me on the show. It seems like there is some minor stress on asset quality front, as we have seen some increase on gross NPA and net NPA, both in percentage term as well as absolute number. So need to get into more details how credit card, unsecured book as well as the PL personal loan has performed during the quarter. And at the same time, I would like to get into details of what has happened on basically NIM front. So I think NIM data is not yet out. So we need to compute that. So NIM again again there were two, three levers which were available for Kotak, wherein there were some reduction on saving account interest rate. The sweep FD rates were reduced. So to that extent, there was some lever. On the other hand, there was supposed to be pressure because of the reduction in unsecured contribution of unsecured book to the total loan book. So we need to delve into it. So do we have the latest presentation available now? Actually, I am unable to see it.
But all we have at this point in time are the P&L figures that are out there. On a standalone basis, we understand last year there was a one-off, so obviously that's contributing to a profit drop. But again, that's not a fair comparison, I think, because that the sale of the insurance arm was adding to that number last year. But at 3,281 odd crore, net profit is still lower than the last quarter. Clearly, what you can see in terms of the operating profit, that is higher. So it seems that largely because of a provision hit, I'm assuming. Yes, that's right. So from about 900 odd crore worth of provisions in Q4, in Q1 you've had about 1,200 crore worth of provisions. I'm assuming this is coming in because of agri and microfinance portfolio, which are the two areas where the risk has been seen at Kotak, right?
Yes. So yes, you are right. I think I can just go through the P&L also.
Yeah.
So last quarter, that is quarter 4, we have seen 909 crore of provision, and this quarter that has jumped to close to 1,200 crore. So a significant jump as far as provision is concerned on year-over-year and Q-on-Q basis. So that can be one of the reasons wherein we have seen a pressure on profitability. Even in terms of operating PPOP before provision, so we can see a minor uptick on a sequential basis, as well as close to 7 to 8% YOY growth as far as operating profits are concerned.
Net interest income is up just about 6%. I mean, for a Q1, do you think that's a strong number? Sunny, could you hear me? I said that net interest income growth is about 6% year on year. So
no. If NII is 6% year-over-year growth, then I think that's a bit of sign of worry, because
right.
I think that is far below the advances growth. So if I remember during the provisional update, the bank has said that their advances has grown 14% year-over-year.
Correct.
And against that, NII has increased by only 6%. Then definitely there is a pressure on, significant pressure on NIM. So we need to get into detail actually, segment-wise what has happened in each and every segment.
So Sunny, the press release has dropped now. Net interest margin seems to be about 4.65% for Q1. And in comparison to that, what you're seeing in the average deposit, average total deposits is up about 13%. While advances are up about 14%. So, I mean, advances growth and deposit growth are not that bad, but clearly NII growth is not looking very strong. And what we are seeing is that unsecured retail advances have dropped to about 9.7% of total advances. So that's a clear sign of the bank deleveraging on its unsecured portfolio and trying to come up on the secured side, assuming that that is why there is an NII impact as well, because you're not really earning that much in terms of interest income.
Yeah, I mean, again, the same trend was visible during the previous quarter. But if I remember during the last quarter, the management has alluded to the fact that going forward, this unsecured book can increase as a contribution of this unsecured book can increase going forward, as they were confident that things are looking pretty well. Apart from MFI, all the other unsecured portfolio, the stress was looking pretty well, and they were supposed to increase the contribution from that. That would have taken their NIM slightly, that would have made their NIM slightly better. But it seems that that's not the case. So, as you have seen in the other banks also, still worse is not behind for the unsecured book, whether it is personal loan, credit card, or on microfinance side. So, I think the same thing has also played out for Kotak.
Your CASA ratio is still at about 40.9%. Do you think that above 40% CASA is still looking good as far as private banks are concerned?
Yeah, I think that's a decent number, it seems, as far as CASA is concerned. But I would like to go through the minute detail when what has happened segment-wise, and this particular spike in provision that is related to some particular portfolio, or it is the stress has spread across to SME book business banking. So if you remember, business banking was one of the key growth drivers for Kotak as well as all the other banks. In case there is some sign of stress over there, then that can be a sign of worry for Kotak Bank also.
I wanted to get your sense about this Q1. So you've seen a spike in NPAs across large banks that have reported results. A lot of it is seasonal, but also, like for example, on Axis Bank, the situation was different. There was because of some internal policy change that they have seen a sharp rise in NPAs. I wanted to get your sense about Q1. Is this looking better or worse or almost same as normal Q1s are?
No, again, I think one thing is pretty clear from the Q1 numbers that, as we were discussing earlier also, that the stress on unsecured book, whether it is microfinance, whether it is SME, whether it is on a consumer side, personal loan, there things have not, things are yet to improve. So maybe we may have to wait for one more quarter, that is quarter 2, wherein things will start looking good, as most of the banks have taken a cautious approach on this unsecured books. And they may go slow in terms of lending on this part, which is usually an high-yielding product. At the same time, the rate cut by RBI, so most like Kotak has got a 60% of its book linked to EBLR. So to that extent, there will be pressure on yield on advances also. At the same time, there are some levers also, like as the deposit rate, TD gets repriced gradually, and at the same time, saving account rate, we have already seen an immediate repricing. So to some extent, I believe that quarter 2 is a quarter where the NIM may start to bottoming out, and then coupled with the bottoming out as far as stress on book is concerned, and then probably from third quarter onwards, we may see a gradual increment in NIM as well as improvement in asset quality. So it seems like quarter 2 will be a kind of muted for most of the banks going forward. And the things should start improving from quarter 3. So I think Kotak PPT has been uploaded. Just a minute, let me go to the details.
It seems that the investor presentation is also out. Taking a quick look at the net interest margin front, let me just pull that up. 4.65 versus 5.02. So that's a sharp dip on the net interest margin sequentially, close to about 40 odd basis points, or 37 basis points. So that's that big drop. Having said that, I think the CASA ratios also shrunk from 43% to 40.9%. That's not that worrying because a 40% CASA ratio still seems strong. ROA front, that's looking quite strong. I mean, if you exclude the gains that were there in Q1 of FY25, from 2.35%, 2.38%, ROA is down to about 1.94%. Any thoughts on that, Sunny?
Yeah, so again, it seems that, yes, as you rightly pointed out, the NIM is significantly under pressure. So it's 5.02% was in Q1 FY25, 4.65 in this quarter. So that's pretty much under pressure. Coming to cost to income, that seems to be okay. So there is no stress as far as the cost to income ratio is concerned. Just a minute.
Sunny, stay with us. We also have Parag Thakkar, fund manager, head of fund manager at Fort Capital. Parag, welcome. I wanted to ask you about what you make of the first cut of these Kotak Mahindra bank figures. I know the investor presentation has just dropped, so we only have access to the numbers sort of just a couple of minutes back. But what are you making of this?
Yeah, so basically, see, it was very clear because RBI has cut rates very aggressively and 100 bips actually in total. So between this quarter and the next quarter, every bank will see 25 to 30 bips in contraction, barring, say, a few like ICICI and HDFC of the world. So I think in Kotak, we'll have to hear on the call that how much of their book loan book got repriced. And maybe if they can say that Q2, the pressure will be lesser, while other banks have said that Q2, the pressure will be higher, NIM pressure, I'm saying, then it will be good. But otherwise, it looks like a very high number on the NIM pressure front. And asset quality, we'll have to hear. See, Bajaj Finance also, we saw that, they pointed out MSME stress. So we'll have to hear from Kotak also on the call that whether they are seeing any stress. Of course, ICICI and HDFC, there was no stress at all. But it always continues to be the case. So we'll have to hear from Kotak what they have to say about the asset quality. Otherwise, asset quality, I don't expect any big blowout from Kotak, like we saw from one private sector bank. But NIM pressure, yes, it is there, but it was expected, but it is higher than expected.
What do you make of the provision figure? There again, there's a sharp jump, 109% year on year. I mean, that's more than doubling of the provisioning figure there.
Yeah, so I'm saying, see, HDFC also created buffer, right? By doing a contingent and floating provision. Of course, they had a one-time gain, so they offset it. So provisioning figure to increase in this environment when economy is a little bit slow might be just a prudent step also. So that is why I'm saying we'll have to hear the call. And it is not as big as jump as Axis Bank was. So I'm not saying that, for Kotak, I don't expect things to blow out completely. Let's hear on the call what they have to say on the asset quality front.
Let me go back to Sunny. Sunny, fresh slippages for this quarter is about 1,812 crore. That's the number that's there in the presentation, compared to about 1,358 crore in Q1 last year and about 1,488 crore in Q4. And Q4 was supposed to be the worst off quarter because of the big microfinance impact that came in. So now your slippages are even higher. That asset quality pressure that we spoke about earlier, that seems to be playing out quite a bit for them.
Yeah, I mean, yes, definitely. I think slippages have increased even Q on Q basis. So that's a little bit sign of worry. And anyway, I was going through the overall breakup of loan book. So we have seen a kind of degrowth in of 12% year over year on credit card front. Retail micro credit has gone down by 43% YOY. And others is close to 19%. So again, pretty much in line with expected, where the microfinance book is being scaled down significantly. So there seems the worry is yet to get over. Credit card book, I am surprised. I mean, despite of lifting of embargo by RBI, we have seen a kind of a degrowth even on Q1Q basis on credit card portfolio. So we need to hear from management on what's happening over there.
That's right. The credit card book is down about 12% year on year, from 13,420 crore is down to about 12,900, a little close to 13,000 crore. Parag, I wanted to ask you this one question. So if you were to look at the retail breakup of books, retail microcredit going down 43% is no surprise at all. But credit card despite them saying that they're going to step it up, and it's been now, this is the second quarter of them having a free rein on the credit card book. There again, a dip in the portfolio, a lot of risk aversion. Is that how we should read this?
Yeah, I think in my view, Kotak is a prudent bank, and like Bajaj, since Bajaj Finance also pointed out, the economy has not done that well, and that is what is being reflected. And so they might say that they have purposefully and intentionally slowed down because they were not seeing the right signs. Even SBI card result, if you see, it was also not that great. So because the overall economy, as the customers are over leveraged mostly, and economy was slow, I think Kotak might have felt that it is prudent enough to apply brakes and then grow when the things are better, maybe after festive season. So I think, see, in HDFC or ICICI or Kotak's case, I feel that, or some other banks like Federal and City Union, I feel that the intent is always to run it prudently and take only a risk which is calibrated. So I think that is the part on that. So I say that result market will not like, in my view. Let's hear them on the call. But whatever is required for the business, they get it done. That is my view on Kotak.
Got that, Parag. Thank you so much. Thank you, Parag Thakkar and Sunny Agarwal, for joining us on short notice and taking us through the numbers, even though numbers were still pouring in as we were discussing things. So yeah, Kotak Mahindra Bank results are a little disappointing. If you were to look at adjusted profit on a year-on-year basis, adjusted because last year the bank had sold its insurance subsidiary, stake in its insurance subsidiary. So obviously one-time gain was recorded in Q1 of FY25. So if you adjust for that, net profit is still down 7% on a year-on-year basis. You've got a sharp deceleration on the net interest margin. You're also seeing a slight uptick on gross NPA. Provisioning numbers are high. Credit card portfolio, which was finally opened up earlier this year because the Reserve Bank of India removed the restrictions on adding credit card customers. Despite that, the credit card book is down 12%. So all in all, looking like a slightly weak set of numbers, but there's a conference call with the management that the media is allowed to ask questions at. That's coming in at 4. We'll keep you updated what the management says.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola
Should I
or
hold CDSL for the long term? Buy, sell or hold?
The answers.
Hello and welcome to Know Your Company. I am Mahima Vachrajani. This is a show where we take up one company every day and dissect the company in and out. And the company that we've picked today is Indiamart Intermesh. It's a very interesting company. Why we have chosen this company? Well, first of all, it came out with its Q1 FY26 earnings over the weekend. A couple of things that I would want to know about this company, that is, when is the recovery expected in the silver category, because the churn has remained elevated in this particular category. In terms of the top 10 customers of this company, there is strong realization that has happened this quarter and has been happening since the past few odd quarters. Will this continue is something that we would want to know, and we would go ahead and ask the management about this as well. In terms of the margins have continued to improve not only quarter on quarter basis but also on year basis. But we want to know as to how sustainable this margins growth is, because the company is spending in terms of their ad spends. They're going ahead and spending more and more on their ad spends, and that is bringing them unique business inquiries as well. So we want to know as to how sustainable margins will be going forward. Now, ad spends have driven up unique business inquiries, as I mentioned earlier also. We want to get a sense as to how ad spends will increase going ahead. What is the kind of trajectory looking like, and what will be the margin impact going forward because of that? The next thing that I want to know is that overall buyer traffic trends, what are they looking like? Because it's an interesting business where they are facilitating businesses overall. What are the buyer trends looking like right now, and what is the growth outlook looking like? The last one that I want to know is the kind of revenue contribution that is coming in from premier customers, because this is something that will augur not only their top line but also their margins going forward, and what percentage of their total revenue is coming from those premium customers, and what are they doing actually to retain their premium customers. So these are the few pointers that we would want to know about this particular company. Now on to what the company actually does. Indiamart Intermesh, what is the company's operations looking like? First of all, it's India's largest online B2B marketplace. It's a two-way discovery marketplace. So a buyer can find a seller and a seller can find a buyer as well. It also has diversified effects across categories and geographies. I'll come to how the network is exactly for this company in the further slides. In terms of the algorithm that the company uses, that is behavioral driven. So overall, how the buyer reacts to any particular product or services is something that will drive the seller, and vice versa. The services that empower business is something that this company actually does. In terms of the overall network, it's a well diversified business. Around 98,000 plus categories is something that the company already offers. Operational in 56 odd industries, as well as around 119 million products is something that they already carry. In terms of their overall geographies, in terms of buyers, if you take a look, metro cities is around 29%. There is tier 2 cities, which is around 24% buyers are coming from, and there is 47% buyers coming in from rest of the India. Now talking about the sellers, we've seen that metro city has the highest contribution there, around 53%. 27% comes from tier 2 cities in terms of where the sellers stand, and rest of the India, around 19% of the sellers come from there. In terms of their overall revenue model, it's basically a subscription based model with overall a negative working capital for the counter. In terms of the revenue breakup, in terms of the customer wise data, the top 1% customer is around 17% of their total revenue. In terms of and of course that includes 2,000 of their overall suppliers. Overall, top 10%, that includes 22,000 suppliers, but that's 50% of their overall revenue. So this is a big chunk out there. And total, they've got around 218,000 suppliers, which is almost, of course, the overall 100% of their revenues. Now, in terms of the key competitive strengths, we talked about the network, but in terms of the key competitive strengths, they've got around 29 million unique business inquiries. There's 152 million overall replies and callbacks that the company generally gets. 43 million active buyers right now on their platform. Overall 58% repeat buyers, which is pretty high. I mean, as compared to something like a Just Dial, of 58% of percentage of repeat buyers is quite a good number. In terms of overall suppliers, that comes out to around 8.4 million. Paying suppliers, that's the 218,000, that's the paying suppliers that they have on their base right now. And lastly, in terms of their overall listed products, that includes 121 million listed products and 98,000 odd categories that I mentioned earlier as well. So that's with regards to where the entire about the company for Indiamart Intermesh stands. Now, to give viewers a perspective that how we will evaluate each of these parameters for these companies, we'll take a parameters of income statement first, followed by balance sheet, cash flow, as well as return ratio, and see how they fared in the past few odd years. Then we'll talk about how shareholding pattern is looking like for the counter. We'll also take a look at how the stock has performed over the past 5 odd years. We'll also take a look at valuations right now compared to its forward-looking valuations as compared to its peers as well. And lastly, in terms of what brokerages are penciling in when it comes to this counter. So without further ado, let's take a quick look on firstly the income statement as to how that is faring. Overall, in terms of the income statement, the revenue has seen overall a 3-year CAGR of 23%. So that's not a bad picture, especially in this particular business. In terms of FY22 revenues, they stood at around 7,500 odd crores, which has gone to almost 1,400 odd crores in FY25. So nearly doubled there. In terms of the EBITDA, the 3-year CAGR has been around 19%. So good growth there as well, from a 300 odd crore in FY22 to almost 523 crore in FY25. In terms of the margins, there has been a slight dip as compared to where FY22 stood. FY22 the margins were at 41%, then they came to around 27 odd percent, and right now in FY25 they stand at around 38%. So sharp recovery in the past 3 years. But the question really here is whether it will be able to come back to those margin levels of 41%, considering that the company is spending heavily in terms of advertisements. So that's one question that we need to ask the management too. In terms of the net profit, the overall 3-year CAGR has been similar to that of the revenue CAGR. It's been at 23 odd percent, from a 300 odd crores in FY22 to almost a 551 crore in FY25. So nearly doubled here as well in terms of net profit. Now, in terms of how Q1 fared for the counter, the stock is under pressure today, but overall good set of numbers in Q1. Revenue was up almost 12%. EBITDA up 11%. Net profit has seen a significant growth of around 34 odd percent. Margins have taken a slight hit, but overall that's because of ad spends going up. In terms of operational metrics as well, collection from customers has grown at a CAGR of whooping 17%. License sold has also grown at a CAGR of 9 odd percent, and net billing has also seen a CAGR growth of around 23 odd percent. So overall, in terms of where income statement stands, it's a thumbs up, because both the top line as well as bottom line has grown over 23 odd percent in the past 3 odd years. That's a 3-year CAGR. Moving on to the next aspect, that's balance sheet. It's an interesting one. The company's equity has seen a slight raise in the past 3 odd years. Overall, the reserves have also continued to grow for the counter, and they've maintained those reserves. And overall, if you see the cash in bank also, there's no borrowing for the company, and that's an important one, because the company does not have any borrowing, and the cash position also remains pretty stable, from a 58 crore in FY23 to around 84 odd crore in FY25. Overall, all of these metrics indicate that a healthy balance sheet is there, and that's why we've given a thumbs up to where it comes to the balance sheet aspect as well. The next one then is cash flow statement. An interesting one here as well. Cash flow from operation has seen a steady growth when it comes to their overall operations from a 476 crore in FY23 to around a 623 crore in FY25. A steady growth in terms of where cash flow from operations is concerned. And this is despite of the kind of overall churn going on in the silver categories, plus the kind of headwinds that the entire industry has already seen. In terms of the cash flow from operations to PAT, that ratio has slightly come down, but it still stands at around 119% in FY25. So that's a strong percentage in terms of ratio to take a look at. Although it was at 178% at a given point of time in FY23, so that's an important aspect to keep in mind too. Lastly, in terms of net cash flow, negative in FY25, but overall, since the cash flow from operations to PAT is healthy, we've given this particular aspect a thumbs up when it comes to the cash flow statement. The next aspect is the return ratios. Return ratios have been topsy-turvy for this particular counter. If you take a look at the return on capital employed, at one given point of time it was 22% in FY21, then it went down to almost 9% in FY23. But it's bounced back in FY25 to that 19% mark. So the question here really is that whether they'll be able to maintain or even grow their return on capital employed going forward or not. The return on equity again at elevated levels in FY21 stood at around 30% came to the 14% mark in FY23 and now has grown to 28% and almost nearing that 30% mark in FY25. So the question really here is also that whether the company will be able to maintain that 28% in terms of ROE or maybe even grow further from that 28% mark and come back to the 30% mark where it was in FY21. The next one is shareholding pattern. Of course, for the return ratios, we've given it a neutral rating right now because we did see a dip as compared to where it was in FY21 coming back to FY23. So we'll have to wait and watch here as to how beyond that FY25 these return ratios performed, and that's the only reason as to why we've given a neutral rating to this particular counter. The next one is shareholding pattern. The shareholding in terms of the promoter, it's a well-held company. Promoters have continued to hold that 49% level in the counter. In terms of the FI holding, that has slightly come down, not slightly come down. In fact, it's come down from the 26% mark to almost 18% mark. So FIs have been slowly selling in the counter. In terms of the DIs, the overall holding has gone up from a 5% mark in March 23 to almost a 15.5% mark in March 25. So DIs have been increasing their stake in Indiamart Intermesh. Public holding has slightly come down from that 18% mark in 2023 to around 16% mark in 2025. The interesting aspect here is that number of shareholders have slightly come down for Indiamart Intermesh from around 1,77,000 odd shareholders to around 1,68,000 shareholders is the count that we have as of March 25. So because FIs have been selling their stake in the counter and shareholders, number of shareholders have taken a slight dip, we've given a neutral rating to this aspect as well. The next one then is street cred. Interesting one. 1 month the stock has seen a growth of around 6%. 6 months it's seen a growth of around 16%. Year to date again 16%. 1 year the stock has not done anything. I mean it's down around 7%. And 5-year performance also of the stock has been muted. I mean it's given returns of only 117%, which is why this particular aspect we're giving it a thumbs down because 5 years the share has disappointed their shareholders overall. Then it comes to valuations. Now the only peer right now in the listed space for Indiamart is a Just Dial. As compared to Just Dial, Indiamart is slightly expensive. The overall FY26 estimates as per Bloomberg suggest that the PE stands at around 30 times. That will go to around 28 times in FY27. This is again as per Bloomberg estimates. This as compared to Just Dial, which stands at around 13 times in terms of FY26 estimates, and will remain at that 13 times in 27 estimates as well. So because it is slightly expensive than where its peer stands, that is Just Dial, we've given it a neutral rating as of now for valuations picture. Lastly, in terms of analyst recommendations, where in terms of where the analyst recommendations stand, there are around 8 odd buys, 5 hold, and 8 sell for this particular counter, and a return potential of around -1% as per what Bloomberg suggests. So that's with regards to where the analyst recommendations stand, and we've given this aspect also a thumbs down. So that brings us to the overall rating, and let's take a look at the overall rating as to where the company stands. Overall income statement, thumbs up. Balance sheet, thumbs up. Cash flow is a neutral. Return ratio is a the cash flow is in fact a thumbs up, and return ratios is neutral. Shareholding is neutral. Street cred is thumbs down. Valuations again are neutral because as compared to peers it's slightly expensive, and street coverage thumbs down because there are 8 buys and 8 sells as well, and a negative return potential of around 1%. And that brings us to the overall rating of 4.5 out of 8 for Indiamart Intermesh. Now with that, let's also welcome in our guest for the day. We have Dinesh Agrawal, CEO and founder of Indiamart Intermesh, joining us now. Mr. Agrawal, always a pleasure speaking with you. You know, before I move on to the details of the company, your sense of how the quarter has gone by. You know, it's been a good quarter. I was just going through your investor presentation. Operational metrics have improved. Overall numbers have improved. Net profit has seen a good growth. What is your sense? Did it meet your internal expectations? What's the view like?
Yes, I think given that last couple of quarters have been muted, I think we are happy to say that we are back to a 10% growth in the standalone collections, while the revenue from operations from the previous collection is showing muted growth. I think we are happy with the overall performance. We would have been happier if our churn would have come down and we could have added more number of paying subscribers. But otherwise, all in all, I think we are happier with the team performance and happier with the product performance.
Okay, Mr. Agrawal, you've always been candid about how churn is very high in the silver category. And I really appreciate that. But I just want to get a sense because, in the past few odd quarters, we've been constantly observing that the churn rate has remained high in the silver category. When do you expect a recovery? And then how do you, expect that impact to be on your financials?
See, two things will... First thing is that once the churn starts to improve, the only thing that we can do is improve the product and product market fit. You never know when do you get 100% right. So we continue to make changes cautiously to the products, as well as we are working towards training and education of our team as well as our newer customers. Now, once the churn comes to the little lower levels, if not pre-COVID levels, then I think we will start to spend money on the sales side of it, and that sales side of it money could have a impact on the EBITDA margin in the near term. But in the longer term, I think the overall growth in the business will continue to happen. Even today, we have about 50% of our customers, which are gold and platinum, contribute about 75% of our revenue and most of our profit. So I think our reliance on silver is lower in terms of the financial performance, but in terms of the growth outlook, I think we continue to work towards improving the product and servicing levels to see how we can improve the paid subscriber addition. From there, we can continue to nurture those customers into gold and platinum customers.
And is there a timeline in place or a possible target in place that you have in terms of converting those silver customers into gold and platinum?
I think silver customers converting into gold and platinum at a healthy pace. The basic issue is that the silver customers themselves are not staying enough. Our retention level for the first 1 year, that is the first target. I think how do we improve our retention level at the 1 year of the silver customers?
Okay, interesting. Mr. Agrawal, your margins have continued to improve, in the past few odd years. Just want to get a sense because in terms of overall improvement, yes, year on year they've improved, but there was a given point of time when, you did have EBITDA margins of almost 41%. But if I'm not wrong, your guided range right now is anywhere between the 30 to 35% mark. Just give us a sense as to, what will be the proper range of margins that you're looking at, because 30 to 35% is a big range. Will it be at the higher end of that range? And is there a further scope of improvement there? And if yes, what will be the levers?
I think I have always guided to stick to around 33% of the margin for the longer term. Now, on a quarter-on-quarter basis, there might be changes, as well as on the year-on-year basis also there might be changes. But on a longer term, I would like to maintain an EBITDA margin of about 33%. That is what I have been guiding. Now, currently, because we are not making enough investments in the sales side because the churns are elevated, and that is why the EBITDA margin looks at 38-39%. So once we start to at a steady state level, I think if you look at the 3-5 year CAGR level, I think 33% is the right EBITDA to look at.
And in terms of your ad spends, because even they are going up, and that is what is actually bringing you your unique business inquiries, correct? And you've guided for a 6 to 10 crore amount that you'll be putting aside every quarter for your advertisement spends, and that from your reading, I understand, will also increase going forward. Then what is the kind of impact that you're seeing on the margins, and what's the kind of overall growth trajectory that you're seeing in terms of your advertisement spends?
No, so currently I think 6 to 10 crores is a good number, and that amounts for about 2 to 3% of our revenue. That is taking into account, we are still guiding at a 33%. I think whenever if we are going to increase the advertising spend, we'll come back and let you know. Currently for the next 2 quarters or so, I think 6 to 10 crore rupees per quarter is a good number.
And Mr. Agarwal, what are the buyer traffic trends looking like right now?
Good. Actually, if you really see, after the COVID, 1 year of the buyer traffic was almost stagnant because in the COVID, suddenly the buyer traffic had grown by almost 33%. And then when the markets opened up, market went to the offline markets as usual. However, from there on, we have started to see upwards of 10% growth in the buyer unique business inquiries. If you see in the last quarter itself, we have grown by 16-17% in the unique business inquiries. Out of that, about 10% is organic, and 6-7% came from the amount that we spent, about 6 crore rupees that we spent. So all in all, from that side, I think we are happy. We need to increase the repeat user base quickly, and frequency of those repeat users quickly. If you see in the last quarter, it was the highest ever repeat user at 58%. So we are confident that the product market fit, that changes that we are doing, they are working slowly, albeit slowly, but I think in the right direction.
Interesting. And do you have a internal benchmark in mind that you have right now for unique business inquiries, as well as your collections and supply storefronts?
Yes, so I think unique business inquiry, if we continue to grow at 15%, that would be a very healthy number. On the collection and subscriber addition, as I said, since our churns are elevated, we are not able to guide anything in particular. In the past, if you see, our paying subscriber additions have also been growing at 10% and ARPU has also been growing at 6 to 8%, and that is what our collection was growing. Now, given the last couple of quarters, since there is a churn is elevated, most of the heavy lifting is being done by the ARPU, and ARPUs are growing consistently healthy. Even this particular quarter, 9% ARPU growth has come in. So I think we are happier on the ARPU growth, and that proves that for the gold and platinum customers, the product market fit is working very well on them. While on the silver side of the customers, we are still finding problems in retaining them for a larger number, and that we are working towards, and we will be able to solve in coming times also.
Today, in terms of the revenue contribution from premium customer, that is also on the rise, which is a positive for the company because that will also aid your bottom line and margins. What's the outlook there?
Yeah, we have consistently grown in the last 5 years. If you see, we were at 40% for the top 10% customer when our customer base was 1,50,000. Now our customer base is 2,20,000, and our top 10% customers are now paying about 50% of the revenue. as I said, gold and platinum account for almost 75% of our revenue contribution, and that is healthier for the company. And we will continue to inch up slowly and slowly on that.
Mr. Agarwal, one last question to you before I let you go. March 25 ended with almost 1400 crores in terms of your top line and 550 crores in terms of your bottom line. What's the target that you have in mind when it comes to FY26 for your top line and bottom line?
I think we will try for a double-digit growth, and let's see what happens.
And what would that range be in terms of double digit?
I'm unable to give you any guidance. As I said, given the elevated churn, let us look at the double-digit growth if we can target.
All right, Mr. Agarwal, I tried my best to get that answer from you, but thank you so much for taking out the time and speaking to us at NDTV Profit, and all the best for the future.
Thank you, Mahima. Thank you.
All right. So that was the management of Indiamart. Intermesh, interesting, conversation there. Margin guidance at that 33%. Management also plans to spend 6 to 10 odd crores, in terms of advertisement. Every quarter, premium segments will be the key lever, as well as management confident of the ARPU growth going forward as well. But with that, we're completely out of time on this edition of Know Your Company. Stay tuned to NDTV Profit for more news and updates on the other side.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. There is a category of mutual funds that has been getting a lot of attention, and that is balanced advantage funds. It's not a new category, of course. It's existed for some time, but particularly because of the change in the taxation of fixed income mutual fund instruments and the way that balanced advantage funds are now taxed because they have a certain allocation towards equity, it's become a lot more attractive for those that are looking to have a certain amount of their portfolio in fixed income. They choose to do it through the balanced advantage fund. But that's only one reason why people do go towards the balanced advantage fund. The other, of course, is that it mitigates risk to a certain extent by dynamically shifting between equity and debt. It is also called the dynamic asset allocation fund. We're going to talk about the different approaches that fund managers have in the mutual fund space to this particular category, because they're not all the same, and what you should look for when you're investing in these and how these funds have done. We'll also talk about a proposal that came through from the Securities and Exchange Board of India that I think is important to debate. It's a consultation paper that talks about maybe the possibility of mutual fund houses being allowed to launch a second scheme in the same subcategory. So for example, if they have a small cap fund which is very large, they have the option to launch a second scheme which could be called a tier 2 scheme. And well, the question for you is, does that make sense? And are there more problems that can occur because of that? We'll talk about that as well. Joining me today is Mrin Agarwal, who is a financial educator and founder of FinSafe India, and Varun Fatehpuria, who is the founder and chief executive officer of Daulat Wealth Management. Thank you so much to the both of you for taking the time. First, let's talk about balanced advantage funds. Varun, I'll come to you first. What are they, and what is the primary objective that someone should have when they're looking to invest in these?
So, Alex, firstly, thank you for having me back on the show. As the name suggests, the more formal name of dynamic asset allocation, the fund managers and the fund houses are able to dynamically manage the allocation between two different asset classes, mostly equity and debt, depending on what the market valuations are and the relative attractiveness of each of those asset classes are at any given point in time. So it falls under the hybrid category of funds, the balanced advantage funds. And most of the fund houses would run this as a debt plus equity minus scheme, if I were to so categorize that, aiming to provide investors with obviously returns higher than what traditional fixed income instruments could provide, and returns may be slightly lower than a pure equity fund, but at the same time, managing to control the downside which comes with participating in a pure equity fund or the perceived lower nominal return in a fixed income instrument. So that is where most of the balanced advantage funds actually typically play in the market. Obviously, the strategy itself depends on what the fund manager intends to provide to the investors through that scheme.
Okay, Vin, do you want to add to that? Also, what is the ideal time frame that someone should have in mind when they're investing in the balanced advantage fund? And of course, sometimes, or rather a lot of times, you invest with a certain goal in mind. What are the kind of goals that you would look to achieve through investing in the balanced advantage fund?
So thanks, Alex, for having me on the show. And I think the Balanced Advantage Fund is like an all seasons fund in the sense that anybody can have it in their portfolio. Of course, given the fact that there is equity exposure, and in most cases, the equity exposure is going to be more than 50%. So given the fact that there is a good amount of equity exposure, I would say that the minimum period of investment would be at least 4 to 5 years. So I would say ideal period of investment between 5 to 7 years. But that being said, I think, Balanced Advantage Fund is such a category which is like a no-brainer fund, right? So if you have an investor who's not sure about how much to put in equity, how much to put in debt, and they don't know when to rebalance, so even if you're clear about your asset allocation, Alex, what happens most of the times is that one is never sure when to do the rebalancing and on what basis to do the rebalancing as well. So I would say that this is a great fund for all of those investors who want one fund that's taking care of all of their asset allocation and rebalancing. And of course, it could be used for any goal that could be there in the 5 to 7 year time frame.
Okay, all right. So let's talk about how these schemes are managed differently, because it's pretty much a blank canvas to a fund manager about how to manage it within certain overarching limits that they need to maintain. But Varun, they're handled very differently. Would you agree? And can you give me a few examples?
Yes, Alex. I mean, as you correctly pointed out, how fund manager and a particular fund manager obviously positions this fund in the market depending on where they are seeing the opportunities. They actually, true to its name, manage it dynamically, right? The net percentage allocation to equity at any given point in time. So obviously internally they could have various parameters that they look at in deciding the attractiveness of each of the asset allocation, right? So let's say they could look at something like a price to book or a price to earnings or earnings yield, vis-a-vis what the levels are for the benchmark indices, and decide what the percentage that they need to allocate to equity at that point in time. Having said that, obviously, given the number of schemes that there are in the market and the AMCs, they run it very differently. So let's say something like a Parag Parik, right? Even though they have that dynamic asset allocation, over the last year and a half, the average net percentage equity allocation has only been anywhere between 12 to 15%, right? But let's say if I look at the other end of the spectrum, someone like a Quant or a Samco, right? They have gone as high as 80 to 90%. So obviously investors need to understand what they are buying into. If they are buying into a fund where they need to balance equity and debt, then ideally they need to look at funds having allocation anywhere between 50 to 60%. And that is the rough average allocation, which most of the fund houses tend to also maintain to provide that favorable equity taxation.
Okay. When you've actually listed out a few strategies that these balanced advantage funds use with examples. So can you take us through that?
Sure. So just adding on to what Varun said, yes, he talked about the various parameters like PE or price to book value or earnings, for example. So for the most common one would be the counter cyclical strategy, where you're basically buying low and selling high, and that's the ideal thing that you need to be doing. The second one would be pro cyclical, which means that you're basically following the trend. So if you believe that equity markets are going to go up further, you're actually increasing your allocation to equities. And of course, this is like a very aggressive strategy to have. Then you have funds which, do a combination, so they do multi-factor strategies. For example, they take into account the sentiment, they take into account valuations, they take into account earnings. And you also have funds that look at macroeconomic factors as well. So I would broadly say that it is either counter-cyclical, or it is pro-cyclical, or it is based on multi-factors, which takes into account valuations and macroeconomics. And each fund creates its own model. And as Varun rightly said, that while BAF is a very easy product to understand, but within that category, the fund really needs to be chosen based on which end of the spectrum do you want to be in. Do you want to be aggressive, or do you want to be into something that's going to be more moderate and follow the book, which is buy low and sell high?
I'm also wondering, Varun, how much attention as an investor you should pay to the debt composition of a balanced advantage fund, because I remember, and this is not recent, this is actually quite a long time back, maybe even before ILFS, where we were talking about the books of some of these balanced advantage fund that had a certain amount of credit risk that they were taking. They were going a little lower in the credit risk parameters that were allowed to them. Of course, it's allowed to them. They could buy corporate bonds, but they were not necessarily all buying AAA rated corporate bonds. And a lot of people don't necessarily understand debt to the extent that they do understand equity. So how much attention, Varun, should you pay to the composition of the debt?
So obviously it is important to pay attention, but let's understand how the fund houses and the fund managers are able to provide a debt-like return. So obviously you play with the traditional fixed income instruments in buying into GSECs and buying into AAA rated bonds, AA rated bonds. And that is where we are seeing most of the universe for these fund management companies actually tend to stop. Going below AA or A rated securities, I think due to the thinly traded nature of these securities itself and the perceived risk which comes into the picture, I think most of the fund managers after the ILFS and DHFL crisis has almost stopped taking any sort of a credit risk. Where they are actually playing fixed income is also through the cash futures arbitrage, right? In providing a more favorable fixed income like experience without taking a direct debt exposure. So yes, there continues to be a significantly high debt component, but that is played equally between fixed income and what they would classify as hedged equity, which could be a debt-like exposure as well.
Okay, so it's interesting that you point this out. So they play duration, and by duration, effectively, you're talking about, viewers, this is how you would look to gain capital when you're investing in a bond, right? Because in a scenario like we're experiencing right now, the Reserve Bank of India has cut interest rates over a period of time, and it could well cut interest rates further given the last inflation print, which is at a multi-year low. So when the yields, that is the interest rates that are offered on bonds, when the yields to maturity are falling over a period of time, your price of the bonds are rising. There is an inverse relationship between the two. And so if you're holding a bond, when the yields are falling, you're gaining. And that's how you make capital gains. But you play that by buying, say, a 4-year or a 5-year or a 10-year bond. The further you go down the duration of bonds, the more the potential for capital gains and also capital losses are when the yields change. So, Varun, the question to you then is, how many of these balanced advantage funds, in your experience, are playing that duration, and how many are actually doing arbitrage, as you've suggested, which actually has become a pretty popular category in and of itself?
So I would say the number of schemes which are actively managing duration and taking the longer end of the tail curve risk is significantly low, right? They have a separate sort of category in debt funds itself through medium duration bonds and medium to long duration and long duration, where they know the kind of investors that are coming into these funds have a certain amount of expectation that they have. So typically we are seeing they play anywhere in the 3 to 5 year bucket, where they are finding the yields to be a lot more attractive compared to the longer end of the curve. And obviously over the last year, I would say they have benefited significantly, where these duration strategies have delivered anywhere between 9 to 10% or at the other end of the spectrum. So yes, they do play in duration, but my suggestion and understanding is only limited to the extent that the volatility is contained and mostly in the 3 to 5 year bucket.
So, Mrin, how these schemes performed, let's get to the brass tacks of it, because ultimately this is what an investor looks at. And also, if you're suggesting you're talking about a 3 to 5 year time frame, what are the kind of return expectations somebody should have when they are investing in a balanced advantage fund?
So when I looked at the rolling returns, when I look at 5-year and 7-year rolling returns, you're seeing returns anywhere between 10 and even some of them going to 15%, which could be a few outliers, because they might have had a higher exposure to equities at some point in time. But I would certainly say that that might be the past performance. Also, we should remember that we also had interest rates coming down. When you look at, for example, 5 or 7 years, right? So you had interest rates also falling as well. So I would actually, go with a 9 to 10% sort of a return expectation in the, with the balanced advantage fund category. And I think that's a reasonable expectation to have.
In the data that you've shared with me, in the rolling returns that you've shared, a couple of schemes stand out though, Mrin, and for absolutely phenomenal returns. HDFC Balanced Advantage, for example, 15.5% return over a 3-year period. You're talking about 15+% even on a 5-year and a 7-year period. And you also have Tata Balanced Advantage, which has a 14.5% over 3 years and more than 15% over 5-year and 7-year. What has worked for these?
So I think, in any fund, I think what typically works for them is the stocks or the sectors that they have possibly chosen that has basically given them this outperformance. Specifically, I would not be able to comment on, HDFC or Tata, but I would think that it's the allocation to the stocks that they did where they had a good amount of outperformance to help them.
Varun, any insights here? Is it the equity portfolio that gives you that alpha? Obviously it is. And so therefore, can you have this kind of a divergence? And is it pretty much normal in a category like this?
So there's this very interesting study which was conducted, and obviously I think BAPS as a category really comes into the limelight once markets deliver sort of negative returns or move sideways, right? In a bull market, no one really wants to talk about BAPS and multi-asset categories. So after September 2024, till about December, when markets corrected about 10%, BAPS as a category at a median level corrected only about 2.5-3%, right? So that is where also the outperformance, Alex, also comes into the picture, because a fund or a category which falls less vis-a-vis the benchmark needs to obviously recover that much less compared to the benchmark itself. So that is where also the outperformance also comes into the picture, because these funds, due to the inbuilt fixed income allocation, arbitrage allocation, they are able to protect the downside better. They are able to control the volatility significantly better, due to which once the markets recover, the recovery also tends to be faster. So obviously, if I look at a market which is moving sideways or in a bear market followed by a bull market, then over that 12-month, 15-month period, the outperformance over a pure equity index would be significantly higher. And that's what we have seen over the last 12 months as well, where Nifty has delivered close to about 2%, but the top performing balanced advantage funds have delivered in the high single digits, anywhere between 8 to 9%.
Yeah, it's not related, but it's something that will elucidate this point perfectly, Varun. And we've spoken about Parag Parikh FlexiCap Fund quite a bit. The reason why they continue to outperform, at least over the last 3 years, is they have had a sizable amount of cash, 20+% even as we speak right now. And so effectively that has allowed them to fall less than the benchmark and also peers. And so their down capture ratio, which effectively captures this, is only 20 in the time frame that I looked at. And the up capture ratio which is the movement vis-a-vis the benchmark, is at 80 for the time period that I looked at. So they've fallen much less than the benchmark, but they've also gained less than the benchmark. But all told, they've actually outperformed because they've fallen less than the benchmark. Okay, so we've kind of covered quite a bit of ground on this. And viewers, hopefully that helps you understand how to choose your balanced advantage fund. But I want to turn to this consultation paper that came through on Friday that spoke about the potential or the proposal to allow a mutual fund house to launch a second scheme in a subcategory where the scheme assets under management are more than 50,000 crore rupees. And the possible reason for this is that if you had a strategy, for example, in a small cap fund where you wanted to be nimble, and of course small cap funds have a requirement to have at least 65% invested in small caps, you want to be nimble as a fund like that. So you want to give the opportunity to fund house to have a separate set or a fresh start where you can invest in more small caps. As the assets under management rise, you need to maintain liquidity as well, and so you need to keep money in large cap funds, and maybe that changes what you originally thought was the thesis. So of course the jury is out on this, Mrin and Varun. I just wanted your initial views on what could occur, because seemingly what they're saying is that if this is done by a fund house, they would have to stop fresh inflows apart from SIPs into the original fund and have a similar strategy, but they've not defined what that similar strategy will be in the second scheme that is launched with the same fund manager. The problems that I foresee is that you could have a gravitation away from the original fund where people redeem and move to the new fund. Why would they stay there? There could be problems with performance. Mrin, would you agree?
Yeah, so I actually have a couple of questions. And, just looking from an investor's perspective, imagine you have two flexi cap funds, or if you have two large cap funds where the investment objective is the same. Now, one of the points I did read somewhere, and correct me if I'm wrong, was that you are also allowed to have a different fund manager, right? So, I think just from an investor's perspective, this might turn out to be a little confusing, because you have two funds that are available, and, people might just get confused between these schemes, and for whatever reason, what happens if the assets of fund one goes down, right? So I'm not sure about these aspects, how it will really play out. And, there's always this propensity, right? As we see that investors want something new all the time, and, they could even end up just redeeming, thinking that, okay, this fund has already touched 50,000 crores. Now it's not going to perform. So let's, move into a new fund, because there the fund manager also has better flexibility to deploy the funds, right? So I think, some of these, I have a couple of these questions, honestly, more than a comment on the consultation paper. These are the questions that I have.
Yeah, absolutely. And it's fair to have questions at this point. Varun, at last count, at least my count, 1,791 schemes offered across various categories. And if you have additional schemes launched in these subcategories under the same threshold, if you had the paradox of choice before, you will have paralysis of choice now. Would you agree?
No, absolutely. I think there are already enough schemes and scheme categories and thematic and sectoral funds to cause immense amount of confusion at the investors level, and perhaps to some extent at the advisors in a distributor level as well. So I don't know how adding more to the same would help the audience in general. If anything, depending on how the strategy actually ends up being shaped, right? It just looks like there are a lot more questions than answers at this point in time with respect to how fund houses end up managing these strategies. But yes, we'll see. I think the devil lies in the detail, and we'll see what the regulator has to say more about it.
Thanks, Varun, so much for that, and Mrin as well. By the way, we had a conversation not too long back on Your Money Matters about how these very large schemes with very large assets under management, these old schemes, how they perform and how they have performed against their peers, and they've actually done pretty well if you think about it. But for now, let's turn to another subject, and this is an ongoing series that NDTV Profit has with the intention of educating you, the investor. It's called Spot the Scam. My colleague Charu has this report about a nationwide scam in Dabba trading that she uncovered.
So the market regulator, Securities and Exchange Board of India, came out with a very interesting press release yesterday listing its actions against the Dabba trading firm that gave a newspaper ad in a Hindi daily. So listing its directions, we have come to know that SEBI has registered a police complaint, a cyber police complaint with the cyber police. Apart from that, they have also sent a notice to the Hindi daily called Nav Bharat against the ad that they have run on their front page, and the Advertisement Authority of the country has also taken the cognizance of the entire issue. Now, coming on the modus operandi or how this was, going ahead, we have come to know that investors were duped of large amounts of money. They were given promises of exaggerated returns and no brokerage fees. However, whenever they booked profits, their accounts were banned or they were only allowed to withdraw partial amounts from them. Now, this is something that was running from Nagpur, Delhi, and eventually even had some links to UAE. And we must understand that this was running as a very formal setup, even though it was completely illegal in its very nature, because people were employed by the entity, over 20 or more people, on the pretext of, giving them a formal job. However, that was not the case. We also have a conversation with this person who was running the operation, who called himself Raghav, and we can, help our viewers listen to that conversation right here.
और आपको तो जन्म भी नहीं होता तब से डब्बा ट्रेडिंग का काम हो रहा है। अभी तो ये NSE, BSE, आप देख पहले क्या होता था, 30 रुपए में लिखा जाता था, आधा पत्ते पे चढ़ता था, आधा नहीं चढ़ता था। धंधा थोड़ी ना बंद हो गया, धंधा तो पहले से ही चल रहा है।
सही बात है।
एप्लीकेशन का काम ये जो चल रहा है, ये 15-16 साल से चल रहा है। मैं और आप तो डिसाइड नहीं कर सकते ना किसी के बोलने से। मेटा 5 एप्लीकेशन है, पूरे इंडिया में चल रही है मैडम, इंडिया के पूरे वर्ल्ड में चल रही है।
सही बात है राघव जी।
हाँ,
कहाँ से हैं आप?
कौन से मीडिया में डालना है ये तो बताइए।
NDTV। कहाँ से हैं आप?
हम तो हिंदुस्तान से ही है, बेस्ड ऑफ दिल्ली है।
दिल्ली से?
हाँ जी मैडम।
दिल्ली में कहाँ से?
दिल्ली में रहते हैं मैडम हम। वो देखा आपने शादरा?
राघव जी, आपको डर बिल्कुल नहीं लग रहा कि ऐसे न्यूज चली जाएगी, लिख जाएगा, छप जाएगा, ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात में खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
All right, now let's also understand what this is all about. What is Dabba trading and why is it illegal? Charu?
Yeah, so Dabba trading, first of all, is a completely illegal mechanism of conducting trades, and it is completely unregulated also. So what happens is that same transfer of securities that happens in the regulated market is also happening here, but it is not taking place on any recognized stock exchanges, which means that Dabba trading operator, a person who is running this scheme, is going to settle your trades on their own platform. This platform is not registered. This platform is not legal or even something legible. It is just something that they have made up and lured investors on the basis of exaggerated claims. Now we must also understand that if the investors are duped of any amount of money, they cannot go ahead and complain about it. None of their grievances will be heard by the regulators. So getting the money back or making a complaint about it is also something that becomes very difficult. Now also coming on to how in current times these things are being conducted. Firstly, you also get SMSs about it. Then you get stock tips on Telegram channels. The Telegram channels are also something where they sort of get more people to gather and get lured into their schemes. Then there are WhatsApp demo calls conducted where people are talked into their schemes, and some explainers and stock tips are also given through YouTube explainers. And some of these entities also have their own Play Store apps which you can download and operate on. So that's how it is being conducted.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for tuning in, and do stay tuned. Lots more coming up on NDTV Profit.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Well, they started by fixing broken taps and all sort of home services, and now they are fixing their site on stock market. Well, no guesswork is required. We all know who we are talking about, the Urban Company. Welcome to NDTV Profit. I am Shrimi Chaudhary and we are joined by today Abhiraj Singh Behel, co-founder and CEO. Welcome to NDTV Profit, and I would like to start asking you a bit of rewind in 2014. What were the problem we were actually solving back then?
Shrimi, thank you so much for having me first of all. It's an absolute pleasure. So 2014, when we got started, we realized that the entire industry of home and local services, which is honestly not even an industry back then, it was an unorganized, fragmented and very broken ecosystem, lacked both standards and quality control for end consumers. They were not able to get high quality and reliable services easily. And also for service professionals, it was very difficult for them to get access to end consumers directly. They had to go through lots of middlemen and local aggregators, local contractors, local thekedars. They were highly underutilized, their earnings were subpar, and they had no real way of formalizing themselves, upskilling themselves and becoming part of mainstream middle class India. So it was a double whammy of sorts, where on the one side service professionals could not move up in their career ladder, and customers also did not have access to high quality, reliable services. So that's the problem that we saw, the three of us together as a co-founding team, and we decided to get started.
But what led the move? Bad haircut or a broken geyser?
Well, it was actually a carpentry job that did not go right, where I recall calling a carpenter from an online Yellow Pages website. I just moved to Delhi, and the carpenter didn't show up. Then I called the second person, that person didn't show up. And then the third person, like the whole day had passed by now, and then the third person showed up in the evening, but showed up without tools.
Okay.
That I think we were anyways looking at this space, but this was the trigger where I spoke to Varun and Raghav, and the three of us said, yes, there's something more here than what meets the eye. This has to be an industry that gets organized. This has to be an industry that goes online. This has to be an industry that offers much better experiences to both customers and service professionals.
How did you arrive at this name Urban Clap? And I'm asking because then after a few years you changed that name to Urban Company.
Yeah.
Is the spirit of the company remains same?
Yeah.
What was the idea behind that?
The spirit of the company absolutely remains the same. So Urban Clap, I think, long story short, I think it had been about 3 weeks since we were looking at various naming combinations. It was very hard to get .com domain names easily for one-letter words. So we had figured out that we have to go with a two-letter word, and we were doing a mix and match of many things. I had almost ended up paying, I think, close to 50,000 or 1 lakh rupees for provala.com, which in hindsight would have been a not a great name, but that was one of the shortlisted contenders. And then Varun walked in one morning and said, there's this really nice name, Urban Clap. We offer urban services and we offer them on the go in a seamless fashion. So, sort of clap to get a service done. And the domain name is available for 250 rupees. So that kind of sealed the deal for me. At a later stage, we wanted to move away from the word clap. One is it has a slightly derogatory connotation in the English dictionary, the colloquial English dictionary. But we also felt that, Urban Company represented more of our ambitions in terms of what we're trying to do, in terms of trying to professionalize the services ecosystem, trying to offer a more holistic service and solution experience for consumers at their home. So it was sort of a name change that was in the making for a couple of years, and eventually in Jan 2020 we decided to go with Urban Company.
Okay. In today's competitive world, it's a kind of challenge to, do customer acquisition and then to retain that. How are you ensuring that? And plus, you seems to be diversified your services as well, especially recently your this home that house help has created a buzz. So what is the idea behind how you go about that in terms of adding on to new services, and then when you take a call on discontinue some services? So if you could elaborate that whole strategy, how you do that?
Yeah, all great questions, Shrimi. So on the customer acquisition front, I would say home services has always been a very large part of the average household's spend. So this is something that they're anyways doing, whether it's home cleaning, home repairs, personal beauty services. Households anyways spend a lot every year.
Correct.
The question for us is, can we do it faster, cheaper, better? Those are the primary building blocks for customer acquisition. Even today, most of our new customers come via word of mouth. So they hear about Urban Company from a friend or a family member. And then newer services like the one that you spoke about, Insta Help, where we offer a trained high quality house help service at your doorstep within 15 to 30 minutes. And this is today available in select micro markets of Bombay, Bangalore, Delhi and Hyderabad, but rapidly scaling out, is our effort to be more and more and more relevant for the average Indian household. See, eventually in the end state, any service that can be delivered in the four walls of your home, where a trained person has to go to deliver that service to you, that is very much part of our playing field and very much part of our long-term ambition. What we have to balance is scope versus depth. Every service that we roll out, we have to go deep into that service, into the supply chain of that service, figure out training, figure out standardization, quality control. And therefore, we have to constantly balance going deeper into services with adding newer services. And you will see over the next 5 to 10 years that eventually Urban Company will play in many, many more service categories, while ensuring that in each one of them we've done justice to quality and end user experience.
Fair. So speaking of the long-term ambition, in fact, a very interesting strategy, I would say, that you also in 2023 launched your own water purifier.
Correct.
And then the report suggests that you are moving and diversified your product portfolio. So how this shift, and are you going to build a product company? Is this a shift from service company to a product company? What is this all about, this entire strategy?
Sure. So let me talk a little bit about this particular diversification into water purifiers. So we started with servicing and repair of water purifiers back in 2015 as a company when we had just launched. After about 2 years of doing that business, we started hearing from our consumers that they wanted branded spare parts, branded filters and spares for water purifiers on our service network. At the time, we made a little bit of an attempt to work with a couple of the leading OEMs in the category, and in their wisdom, they decided that it wasn't worth it to work with us. Maybe we were a very small company also back then, so not worth their time. But we were forced to actually go down the path of making our own private label branded filters and spare parts, which we launched around 2017, 2018. And then the next 3-4 years, these started to do really well. We spent a lot of time and energy in developing them, and about 75-80% of our service partner network started to adopt them organically. This gave us the confidence that we can succeed in this industry. In parallel, we were constantly hearing from consumers this deep-seated pain point that why is it that I need to change my water filters and spare parts of my water purifier every 6 to 8 months, go through expensive AMC programs, the hassle of calling the service station, it just was a category where consumers were not happy with their experience. Eventually in 2023 we launched the native M1 and M2, which in my humble opinion are the best water purifiers in the industry. They need no service or filter changes for 2 years. Okay. They're also smart, so they're connected to the Urban Company app. You can see the quality of water you're drinking, the life of the filters individually, and whenever the next service is due. So a very different take on an industry that had largely been opaque and not transparent with its customers. We took the other extreme approach, which is let's be super transparent. Let's come up with a product that is very, very performant and low on maintenance. And if you think about it, Shrimi, as a service company, we should have come up with a product that needs a lot of service, right? We came up with a product that was right for consumer and actually needs less service, because that original question that you asked, which is you're a service company entering into a product, we don't see ourselves that way. We think of ourselves as a consumer company, not as a service company or a product company. We may have started with home services, but as a consumer company, we are here to solve problems within the four walls of the consumer's home, end to end. In this case, the problem statement was clean drinking water. We started with repairs, then got into spares, and now we are offering the entire solution itself.
So are you going to add more products in the portfolio? For example, are you planning to add ACs there, smart lock solution, and if at all there is a long-term plan as far as product diversification is concerned?
Yeah.
What is going to be your manufacturing model? Are you so far I'm believing you're sourcing from third-party vendors, so are you going to also have your own in-house manufacturing setup?
Sure. No, great questions again. So we have launched a second product as well, which is the native smart door lock. Again, it's a very, very high quality product, rated very highly both on the Urban Company app as well as some of the online retailers, and growing very fast. It's an interesting product where the smart door lock is integrated with a video doorbell. So anytime somebody rings your doorbell, you get notified on the Urban Company app. So again, you can see that common theme of being integrated back into the platform, the Urban Company app. I think for now, we're going to focus on these two products. I think the goal will be to grow them well, to turn native into a profitable second act for the company. As far as manufacturing is concerned and product development is concerned, so the entire design, development, and product R&D happens in-house. For manufacturing, we work with third parties. In case of the native water purifier, it's a very, very close relationship we have with a leading contract manufacturer based out of India. So it's a fully made in India product. And we work deeply with them to control quality testing and have our own people, on site. I would not rule out at the right time if we feel that we are capacity constrained by the capacity of our existing contract manufacturers and we need to go down the path of assembly. Finally, whatever is needed to win in the category, I think that's something that we will do. But one step at a time. We recognize that native is still young and early. As a second act, we have to get to scale, we have to develop the brand, we have to develop a portfolio of great products so that it's not, a one-off, good product that we launched. And to that extent, we want to be able to, prove to ourselves that we are on the right track with native.
But Abhiraj, tell me that this shift, do you think that it will influence the IPO, which you filed recently with SEBI. What kind of feedback, off record, on record, from the market participant you're getting on this IPO, especially to the fact that if you see the startup IPO, the sentiments are not that great. We have seen that in the past. So one, how this shifting is going to influence IPO, and then about the sentiments as far as public listing is concerned.
So I think from our long-term strategy standpoint, Shremi, we think of ourselves as a home platform, which will eventually offer not just home services, but also home solutions to end consumers. Whether it's an end-to-end water purification solution, smart home door lock. We've also got into wall decor recently with our wall paneling and wall decorative solutions, which is a meaningful extension from our painting business. So, in these solutions, it's hard to define the boundary of what is product, what is service. Many of these categories require strong service execution and strong service capability to be able to win in the marketplace. We ourselves don't think of the boundaries when it comes to these solutions. As I said earlier, we look at ourselves as a consumer company, not as a services or a product company. And if an end solution is needed that solves the consumer's problem and it requires us to go beyond pure play services into the realm of products, we are not shy from doing that, while also recognizing that with each such related diversification come their own challenges and internal capability building. So we have to be thoughtful when we go about building that capability. Look, I can't, I can't speak about how the market will view some of these things. I think only time will tell. But as a company, we are committed to being very transparent in our strategy and our disclosure to all market participants. Our job is to build the business long-term, the right fashion, so that it creates value for all our shareholders. And all along the way, whatever we are seeing, and whatever strategy we are internally developing, communicating that in a clear and crisp fashion, backed by the right numbers and disclosures to the market, so that they can take a informed decision whether they want to invest in urban company or not. And this is not to say that we won't make mistakes. I think as a young and ambitious company which wants to be significantly larger in the future than we are today, I still feel we are a very small company and we are just getting started. And over the next 10, 15, 20 years, I would like Urban Company to be one of the most important companies of India. One of the most important companies for your home, right? The top 2, 3, 4 companies in your life. I think we have that potential. And if you see some of our moves, whether it's in InstaHelp, whether it's in home solutions, it is with that intent to be a home platform that is one of the most important in your lives. So I think we are a very small company today that has the potential to be a very, very large and important company for India in the coming future. Our goal is to put our heads down and execute towards that vision.
Absolutely, but just wanted to, out of curiosity, that when you actually started almost a decade ago, did you ever think at that point that one day I'll go for listing? Back then, do you have that kind of plan? Did you sort of, factored in?
No, I don't think one thinks that far out, right? I think when you are starting out, it's about survival. It's about, this week, this month, next month, how do I, build a product that consumers love? How do I put something out there that works? I don't think you are thinking that far ahead. But that's the beauty of entrepreneurship, right? You take the first leap, you start out, you hope for the best, you work hard, you put one step ahead of the other. And before you know it, things start to work out. Luck plays a role as well. You have to be grateful for, the right roll of dice at the right time and luck playing in your favor. And I'm very grateful, right? I recognize that the opportunity to build this transformative company, which has such a large-scale impact for our customers, as well as for hundreds of thousands of service professionals on our platform. This is a non-trivial, opportunity. Not everybody gets it, and for somebody to have the opportunity to lead a company like this into the public markets I think I'm very grateful for that opportunity, and I'm deeply committed to doing justice to the vision of this company.
I'm sure. Just wanted to understand one more aspect, since any shift in the strategy of any company, and since service professionals are the backbone of urban companies, so how you think they will fit in this, the shift from both for services to product? How they are gonna do that? I mean, what's the preparation there?
Yeah. So you're right, Shrimi. I think from very early days itself, service professionals have been the backbone of the company. Our goal has been very clear. We believe happy professionals lead to happy consumers, and therefore a lot of our work is with service professionals. Most of these individuals, prior to joining the platform, are coming from an unorganized and fragmented ecosystem where they are making maybe 10, 12, 15,000 rupees a month. They have not gone through formal training. They have not gone through any formal certification program, but they have the intent to prove themselves. They have the confidence to say we can do something. And we bring them onto the platform. We train them extensively in our training centers, certify them, provide them with the right tools, equipment. And right off the bat, most of them, if not all of them, will see a 80 to 100% jump in their earnings. We publish transparently our annual earnings index. We've been doing this since 2021, and these are audited numbers. And if you look at FY25, the average professional on the platform made around more than 26,000 rupees, 26,700, I think, to be precise. Net of all commissions, taxes, travel costs, product costs, etc. And this represented only 83 monetized hours on the platform, which means by working on an average for about 3 to 4 hours a day, they were able to make 26,700. The ones that did about 100 hours plus made around 33, 34,000. And then you see the top 20% who made 40,000 and the top 10% who made 45,000. So honestly, the platform today offers earning opportunities that are much higher than even entry-level white-collar IT, ITES roles for a blue-collar workforce, which is a great starting point. Coupled with this, every professional gets free life, accidental and health insurance. Our best performing professionals get family health insurance, which covers spouse and 2 kids. They get access to loans at very affordable rates on a tap, whether it's a personal loan, vehicle loan, etc. For our women service professionals, we have a lot of safety efforts that go in. We've started a new program called Project Udaan, which focuses on mobility services for women. Project Nidar helped a lot of our women partners who were subjected to domestic violence at home to overcome that. So a lot of the emphasis is on the back-end service professional side.
I'm sure, and I'm sorry to interrupt you there, because since you're talking so much about your, working professional, I would like to, if you permit, see the training center where you train people. That's the backbone of the urban company. Would you mind taking us there?
Would love to. We have a training center right here near our office. So let's go there and let's have a look. This is our flagship training center in Gurgaon. We have such training centers all over India, and every service professional prior to joining Urban Company is thoroughly trained by us in both technical skills, soft skills, and the Urban Company's signature way of delivering the services.
I would love to see that. Let's go.
We have such training centers all over the country.
Okay.
And we'll take a look at a couple of trainings. We have a beauty training happening here. So this is our live facial training program. Maybe you want to talk to one of our service professionals.
किस तरह आपकी ज़िंदगी में सुधार आया है अर्बन कंपनी ज्वाइन करने के बाद आपके?
मेरी 10 साल की बेटी है, तब मैंने कंपनी ज्वाइन की थी। वो बहुत छोटी थी, सैलून में जॉब करके मैं उसको बिल्कुल भी टाइम नहीं दे पाती थी, अच्छे से घर भी नहीं देख पाती थी। अभी मैं अर्निंग्स भी बहुत अच्छी करती हूँ एंड अपनी बेटी को भी टाइम देती हूँ और मैं अपना घर बहुत ही अच्छे से संभाल रही हूँ कंपनी के साथ काम कर।
Come, we'll go through another training of an electrician and hear from them what their experience is like.
Sure.
This is a electricals training that is going on right now. Hello sir, how are you? And we have a few service professionals. Maybe we'll have a chat with one of them.
यहाँ पर आप किस तरह से थ्योरी समझाते हैं?
यहाँ पे हमें अर्बन कंपनी की पॉलिसीज़ वगैरह, SOP वगैरह वो सारी चीज़ें समझाई जाती हैं कि हम किस तरीके से प्लेटफॉर्म पे काम करेंगे, हमें क्या क्या चीज़ों पे किन किन चीज़ों का ध्यान रखना है, ये सारी चीज़ें हमें ट्रेनिंग टाइम पीरियड में समझाई जाती हैं। उस हिसाब से हमें यहाँ पे ये बताया जाता है कि आपको फील्ड में किस तरीके से वर्क करना है, किस तरीके से आपको ट्रेवल करना है, किस तरीके से आपको कस्टमर से बात करनी है, किस तरीके से अपनी सर्विसेज के बारे में बताना है, किस तरीके से कस्टमर को अपनी सर्विस प्रोवाइड करना है।
No, as he's talking about, and I wanted to ask also that customer grievances is one of the very important aspect for any service company. So how you are dealing with that? How prompt are you when it comes to, feedback, their issues? How you resolve all those things coming from the customers?
So that's an area of meaningful investment for us. We train our service professionals to handle customers with the right SOPs, with the right processes. At the same time, we also have a well-equipped customer grievance redressal cell, and any customer issue or query is resolved by them. We've also launched state-of-the-art programs to protect the interest of customers. For example, in repairs, our appliance repairs, electricals, plumbing come with an automatic warranty program that we call UC Cover, which could be warranty up to 6 months, where you don't have to talk to a customer service representative to explain yourself to claim that warranty. It's a one push on the app warranty claim process, and we will make sure that if the problem has reoccurred, we come back and resolve that issue. So we've launched several such customer protection programs, which are state of the art, and first time such programs are being launched in India, which protect the interest of the end consumer.
So how's the response so far? Is it like the feedback? I mean,
I think overall very good. So if you look at FY25, our average ratings that consumers gave us on a 5-point scale across millions of jobs was 4.81. So 4.81 out of 5 was the rating consumers gave us. 82% of our business in FY25 came from repeat users, users who were acquired prior to FY25. So it's a very high repeat business that we have been able to build on the back of customer satisfaction and customer love.
Well, Abhiraj, I want to wrap it by asking you that where do you see Urban Company in next 5 years down the line?
Shrimi, as I mentioned earlier, we still think we are a very small company. We have set the foundation for the future. We have a very large opportunity ahead of us in the home services market, and we are only scratching the surface of this opportunity. Over the next 5 to 10 years, I want to do justice to this opportunity by bringing to India the best and highest quality of services rendered at home seamlessly, and also help empower hundreds of thousands of service professionals lead better, dignified middle-class lives and realize their full potential. In doing so, we would want to be known as a good for India corporate citizen, one that does right by all stakeholders and is a well-run company with the highest standards of ethics and corporate governance, and sets a benchmark for the new economy listed companies in India. That's the goal. I think if we are able to accomplish that in the next 5 to 10 years, we would be happy with ourselves.
Thank you so much, Abhiraj, for taking out time for us and showing us such a wonderful training center. Thanks for sharing all your insight.
Thank you so much.
All the best for the public debut.
Thank you so much, Shrimi. Thank you so much.
Welcome viewers. This is a call for Disruptor Show Flight. During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
Hello and welcome. You're watching KYC. I'm Harsh Saita. With me is Mahima Vajrajani. And do you want to play FMCG? And do you want to play FMCG in a more interesting fashion at probably a better multiple? That's really the question we are asking today from the company that we've called. We're going to be speaking with an AGI Greenpack. And of course, as always, before we speak, we try to give you insights into what we want to know from the company. So let me start off with that. In FY25, we saw cash flow from operations versus the EBITDA number come off. That's never a healthy sign, but FY24 and FY23, we were fairly okay on that count. So what happens when operating cash flow falls? There's an increase in receivables or there's a reduction in payables. Well, both of that have happened. The management has given guidance that will unwind in FY26. I will want to understand whether that unwind has actually happened. So that's my first big question, because cash flow is obviously king and we want to know whether cash flow has stabilized or not. Second, capacity debottlenecking. Now, the company operates at a 95% capacity utilization. It's been doing so last year. It tried making an acquisition. That acquisition clearly didn't work out. Therefore, they are now looking for organic options. That organic option doesn't come in or doesn't kick in till FY28. So what are they going to do now? They're going to do some debottlenecking. What's the visibility like and what's the top line impact like? That's what I want to know. But that's FY26. I also want to understand FY27. What will that number be and where should we expect growth to come in at? Now, point number 4 is CapEx. They're doing a large CapEx, 1700 crore. A different product line in aluminium cans is what they will do. Along with it, they will also add a 25% to their glass bottling plant. All of those to add up, obviously, in terms of numbers going into FY28. So I want to understand what the CapEx is going to be like, whether this is the number that we can expect, how do you fund it, and what is therefore the overall picture with regard to CapEx as well as returns, because return on equity will fall because you will have such a large investment upfronted. Now, the next point is I want to understand what the confidence is of the management in EBITDA per ton. They say that is the better metric than margins to look at. EBITDA per ton, they are saying, will go up by approximately 6% annually. If that were to be the case, what is the visibility like? How many years will it continue to go up for? And what is the comfort like on that number? Raw material price pass through. They do soda ash in terms of raw material, and then of course plastic has plenty of raw materials as well. So glass has soda ash, plastic has plenty of raw materials as well. All of that combined, what is, they claim that they pass it through to customers. We will clarify that, and we will also understand what the comfort is with regard to that. Last piece, they are going global, and they're going global in a big fashion. What does that mean? Because in today's dynamic global environment, it's a difficult thing to do, from going domestic to looking global. Can they overcome challenges? How are they standing out in the global marketplace? All of that is what I'd want to know with regard to an AGI Greenpack. Mahima, you want to start off with about the company?
Sure. So, as Harsh rightly mentioned, if you want to play FMCG from a backward integration perspective, then this stock you must keep your eye on. It's India's largest container glass manufacturer and packaging leader, focusing now more on eco-friendly packaging. It's B2B focused, serving 500 major plus clients across industry. It's expanding rapidly into premium and eco-friendly packaging, as I mentioned earlier. New entry, the aluminum cans that Harsh was talking about, is something that's going to further diversify their growth going forward. So that's a new one on the board for them. In terms of products and brands, basically it's in partnership with 500 institutional clients. The different brands that it has under its umbrella, the first one is AGI Glasspack, that basically makes your glass containers, glass packaging solution bottles for roughly 1.5 ml to almost 6 liters, so that it's that wide a range. In terms of glass bottles, this is generally used in your cosmetics, perfumes, beverages, FMCG, chemicals as well as pharmaceuticals, but majority of their packaging goes to FMCG, around 6 to 10% goes to pharma and chemicals. Customization is available with colors, labels, prints, etc. So that's something that they give to the brands. The next one is AGI Plastic, which is another brand which focuses on PET bottles and packaging. So it makes your PET bottles, your HTP, your PP bottles as well. Basically, it's used for soft drinks, your water, edible oil, personal care sectors as well. So again, another FMCG theme to play with. The next one is AGI Closers. Now this is an interesting one because they make anti-counterfeiting security caps, and this is generally used in your alcohol bottles. So and this they customize with holograms as well as RFID. Plus they have high quality resistant security caps. So again, highly used in the alcohol industry. The cutting edge technology also helps them deliver the best in class when it comes to these particular caps, and it also has security features such as safetying, tamper evident seals, unique identifiers, and product authentication as well. The new business that we've been talking about is the aluminum cans, where it's going to do a 700 crore capex, and this will be for beverages, of course, and this will of course expand their base overall in terms of clientele and also cater to the existing F&B clients that it has. In terms of where does it manufacture, it's got around 7 plants in India, in Telangana, Uttarakhand as well as Karnataka. In terms of the overall production capacity, that's around 2,000 glass in terms of tons, and PET bottles, that's around 11,982 tons. And lastly, who does it sell to? As Harsh mentioned earlier, they are planning to go big way in terms of global, but right now the breakup is around 95% in terms of domestic sales and in terms of market distribution, and 5% it comes from the export. So this is the entire whole and soul of the company, as in where it stands right now.
Well, yes, so thank you for that, Mahima. But so 5, can we have that graph again, please? So 5 and 95, this might likely change. The goal is to get this to 15 in the short term, 15, 85, and thereafter go from there. Really, that's the goal. But I don't know if things have changed, because globally the picture looks quite different now. So, so again, something to keep in mind. The other piece that maybe we've not put in here is the fact that the top 10 clientele contribute over 50% of the top line of this company. So that is a key risk. You have 50% of your revenue coming in from the top 10 clientele, despite having 500 plus clients. What's the risk like, and how long are the contracts? That's the other piece I'd want to understand. But yes, that's broadly the case, and we'll speak with Sandeep Sikka, who's the group CFO at AGI Greenpack, in a short while. Let me start off with the metrics without delay. We'll start off with the income statement, the balance sheet, the cash flow, the return ratios, the shareholding, the street cred, Thereafter, we look at outlook and return ratios. So we'll outlook and valuations, I beg your pardon. So we'll look at all 8 of those metrics and we'll give you a deep dive on each of those. Let me start off, or rather I'll allow Mahima to start with the income statement.
Sure. So in terms of the overall performance when it comes to the P&L statement, the metrics are looking very strong in terms of the overall revenue growth. It's grown at a CAGR of 21%, but something that I found interesting here was that as of FY22, it stood at around 1400 odd crores, which has gone to 2500 odd crores in FY25. But from FY23 to 24, the growth has not been much. From a 2200 crores to a 2500 crores in 3 odd years. So that's something to keep in mind. Then there's EBITDA, which is of course grown at a CAGR of 32% in the past 3 odd years, which stood at around 265 crores in FY22 to almost 600 crores in more than 600 crores in FY25. So a good growth there for sure. Margins are at the highest point as of FY25. That's interesting because at 24%, the guided range, if I'm not wrong, is around 22 to 25 odd percent.
That is correct.
They've done 24%. So we'll have to figure out as to what is the margin trajectory going forward. Will they be able to sustain that 24% mark, or will that be at the lower end of the band? The last one, that is net profit, well, 3-year CAGR has been 19%, so a good growth there as well. But like in the case of revenue, here also, as compared to last 3 odd years, from a 260 odd crore profits, it's grown to only around 320 odd crores in terms of profits. So that's something to keep an eye out for. In terms of the Q1 FY26 performance, well, revenue saw a growth of 22 odd percent. YOY basis, EBITDA saw a growth of around 4 odd percent. Margins, of course, have taken a hit. And net profit has seen a growth of around 6 odd percent. So that's with regards to where the Q1 FY26 performance stands, Harsh.
Well, yes, let's quickly look at the margin trajectory as well. FY22 to FY25, that's on a positive trajectory. So you're largely looking at positive metrics coming through. Q1 was slightly softer, but the markets really brushed that number off and has moved on with it. Let's look at the balance sheet now. You look at the overall book value, it's around 2100 crore. The market cap is around 6,000 crores, so 3 times book is what this one trades at. You have borrowings of around 550 crore. The positive here is borrowings are on a reducing trajectory, but with the kind of capex that is being planned, I want to understand whether there is a risk to this number, because at 550 crore, you're already looking at a 1:4 book. This could well go up, and hence we've been cautious about the balance sheet. We've given this a neutral where the balance sheet is concerned. What you also want to note is the cash and bank balance, 365 crore. For a balance sheet size of 2,000 crore is no mean feat. It's a 15% of the balance sheet sitting in cash. So that's another key positive. So frankly, more positives than negatives. The net debt is also extremely low. And when you're looking at the overall picture, you're looking at 900 crore of cash, but you still have 800 crore to get funded. And therefore, we've just been a little bit cautious here for the moment. We've given this a neutral, but nonetheless, there's a positive bias where the balance sheet is concerned. There's no doubt about that in our minds. Let's look at cash flow as well. And Mahima, I'll tackle cash flow. In terms of the cash flow number, if you're looking at the way in which it's gone, you look at the EBITDA number and you look at the operating cash flow number. Largely, the CFO to EBITDA has been over 100, which is positive. There's absolutely no question about it. The only possible pain point here is in FY25, when you had 65 crore of additional receivables and 62 crore of lower payables, both of those. Now, management attributed that to the fact that there's going to be a lead and lag, obviously, and that just happened to be at the year end. And therefore, you saw that differential on the financials. Otherwise, they're expecting an improvement to that number. Of course, the 204 net cash flow is largely because they'll continue to make investments in terms of capex. So I wouldn't read too much into that. But the CFO number, obviously, standing large. But return ratios, Mahima.
Right, so return ratio has been on an upward trajectory. If we take a look at the ROE number, from an 8% in FY21, it's improved to almost 20%. And that
future for the country, for the sovereignty and integrity of the country. Today also is another special day. Only yesterday the Honorable Prime Minister completed. There is an audio problem, I can also feel it. Hand mic पे क्या देखो? कैसे हो रहा है ये वाला माइक उनका दूसरा? हेलो, सेम. किधर कुछ तुम्हारे सिस्टम में प्रॉब्लम है? नहीं सर, मतलब अभी आज तक मैं यहाँ पे 500 बार चुका हूँ यार.
Hello, check. Hello. So,
ये जगह पे प्रॉब्लम है कुछ.
hello, check.
Hello and welcome to NDTV Profit. India and UK recently signed a comprehensive economic trade agreement on July 24th, marking a historic moment in international trade. The deal that was signed after years of consistent negotiations has made headlines and goes just beyond being an economic milestone. But, and we have Piyush Goyal's press conference from Delhi addressing this trade deal between India and UK.
Serving Prime Minister continuously in office after Jawaharlal Nehru ji. And in a way, this morning when I read that the latest international survey has again shown the Prime Minister as the most popular leader in the world, it only goes to vindicate that the work that he is doing in the interest of the nation, in the interest of the people of India, and the global acceptability and reputation that he has earned, the trust that he has earned across the world. 27 global honors being given to one leader is by itself a record. It shows that the world today recognizes and respects India, and the free trade agreement between India and UK, the comprehensive economic trade agreement, clearly reflects the growing relevance and importance of India at the world stage. And it also shows that more and more countries, including and particularly the developed world, is today appreciating that India is the future. The business opportunities with India are the best. The goods and services that India provides to the world have high quality and cost competitiveness, and the demographic dividend, the young aspirational Indian working in the rule of law, a democracy, fastest growing large economy in the world, decisive leadership, and the demand that a fast growing middle class and growing incomes of our people generate make for India becoming the preferred global partner. The Honorable Prime Minister of United Kingdom also said that this is the most important free trade agreement that the UK is entering into post-Brexit. In fact, this is a very comprehensive agreement having 30 chapters. I don't recall any other FTA has 30 chapters. And a very wide span of subjects are covered. So much so that without compromising our interests at all, we have been able to come to terms on even issues like gender, environment, on IPR, intellectual property rights, and there's some misconstrued notions that some of you have carried, which I'm happy to address. We have protected all the sectors of India's sensitivity vis-a-vis UK. Every country you have different sectors which are sensitive. There's no one size fits all. So dairy, for example, we have not opened for UK. Rice and sugar, we have not opened for UK. So specific areas of concern where we do not wish to give access, we have been able to protect so that there is absolutely no area for concern for India in this FTA, whereas we have got 99% plus access, preferential access, in most cases zero duty access for the exports that we do to the United Kingdom. So zero compromise, extensive benefit. It makes for a phenomenal free trade agreement, a historic agreement which will not only support export of goods and services, but will also bring a stable, predictable and secure framework in which India can become a trusted partner for UK's supply chains, encouraging more investments into India. India can become a partner of UK for technology, innovation, and in some sense, it will open the doors to the developed world for India. I'm sure most of you have already noticed that unlike the UPA, the Congress-led UPA, which used to do agreements with countries like the ASEAN region, who are our direct competitors, who did not open their market as much as India opened the market for their goods. The Modi government has done FTAs with developed nations like Mauritius, Australia, UAE, the four-nation EFTA, Switzerland, Norway, Liechtenstein and Iceland. Now with UK, we are in negotiations at an advanced stage with Oman, almost finalized, with the European Union and USA making fast progress, with Peru and Chile, countries which do not threaten India as a competitor, but actually complement our own strengths. The global stature that today India enjoys, the global trust that we enjoy, has helped us to protect our sensitive sectors and open markets to textiles, footwear, leather, jewelry, gem and jewelry, marine products, agri products, medicines, all areas of our interest which generate lakhs and lakhs of jobs, where our share as a part of the UK import is today very minuscule. In fact, I was just reading up that take a simple area like textiles. UK's import on textiles is about $30 billion. And their duty rates are up to 12% for different products. 30 billion is their import. We often used to complain, the textile industry used to say Bangladesh gets an edge. Being an LDC, they are able to export at zero duty. So we are unable to compete with Bangladesh. We are unable to compete with Vietnam because that was going zero duty. And therefore our textile export to UK was only 1.73 billion out of that 30 billion. That is about 5.5%. Now we'll also be at zero duty. So imagine the huge delta of opportunity that has opened up for our textile sector. Leather footwear is even more interesting. Leather and footwear sector, leather products and footwear. Duties are up to 16%. So we only had $500 million of export in a $10 billion market. Imagine the huge potential. Our mochis and our Kolhapuri chappals will benefit significantly with this zero duty on all footwear, all leather products that go to UK. Gem and jewelry, their import is about $80 billion. They had duties of about up to 4%. But in gem and jewelry, you all know, even 4% is a huge duty because value add itself is small. Now we'll have zero duty access. So we can grow from $500 million, which we do out of 80 billion today, to sky's the limit. On marine products, I have many other products in my list and large imports. In mechanical machinery, we pay up to 8% duty, therefore we only export 1 billion out of 77 billion imports in UK. Like that, I can give you about plastic, rubber, 22 billion imports, plastic and rubber goods. And our share is only 300 million. 22 billion, 300 million. That's 1.5%. But look at marine products. They import about 2.73 billion. Our share was only 120 million. So much potential we were losing because for 25 years we could not come to terms with them. And they gave up on India around 15 years ago, 14 years, 12 years ago. They stopped negotiating despite having started in 2004-5 or thereabouts, or 2-3 the discussion started. They gave up and they stopped the negotiations. It is only after Prime Minister Modi was able to generate enough confidence that yes, India will do an FTA with advanced and developed economies with whom we used to shy away in the past, that we launched again, I think end of 21, started negotiations in 22. Unfortunately, 24, they had an election, we had an election, so we had a hiatus. And then we relaunched in October 24. And in less than 7-8 months, we finalized the whole agreement. That's the speed with which Prime Minister Modi's government functions. Processed foods, our export is only 200 million. Their imports are 34 billion. So we are what, 0.5% nearly of what they are importing. So why should Haldiram and Bikaner and the likes? And India is a very cost competitive and very attractive manufacturer of processed foods. This will help our farmers also. And I think sky is the limit in terms of the potential for furniture, for sports goods, for animal products like meat, vegetables, fruits, spices will all go zero duty, another big area of India's interest. All in all, an agreement which can help us to grow our current exports dramatically. Our current exports are probably about 15 billion or so, 15-16 billion dollars. But UK imports are nearly 750 billion dollars plus. So that is the delta of opportunity that India is going to work on. And I can clearly see that every state in the country stands to benefit. Whether it's Pashmina from Jammu and Kashmir or Bhagalpuri silk from Bihar, whether it's the pharma industry from Telangana, Maharashtra and Gujarat, or the auto component industry in Pune, Tamil Nadu or Haryana. In fact, there's a huge breakthrough also in terms of joint education programs. The advantage with an FTA, it is a signal, it's a demonstration of mutual trust and friendship. And because of this FTA and the National Education Policy 2020 opening the doors to international universities, we already have 6 UK universities who are opening India campuses. This will provide our youth joint degrees. They won't have to spend lakhs of rupees to study abroad. They can get a UK degree studying in India, or maybe spend 3, 4, 6 months in UK and spend 2 years here, get a joint degree at less than half or 1/4 the price. And the biggest benefit that this free trade agreement provides is to the services sector. The services sector had a big problem because they were sending their employees to serve in UK for 2 years, 3 years, short durations. And during that period, nearly 25% of the employees' income was being paid into the National Security Program, their pension program. But because these people did not stay for 10 years, which was a minimum required to get the benefits of pension, the money they were paying was lost. So arguments say, I think anybody working in UK would be earning at least £5,000, an ICT, a technology guy or an engineer or a software guy. At the least would be earning £5,000. I know people earning 100,000 and 200,000 pounds also, who are required to go to serve the IT sector or business processes or consulting. But even if we take the lowest case, at 60,000 pounds a year, they had to pay 12.5% out of that to Social Security, and the employer had to pay 12.5%. So net 25% was lost and never gave any benefit to those employees. And I'm told there's nearly 100,000 Indians who have gone as intercorporate transferees and are working in different jobs on behalf of Indian companies or UK companies which invite them. So even at low 60,000 pound earning, they were losing 15,000 pounds, which is about 18 lakh rupees per year. So if somebody went for 3 years, you can imagine what loss he was doing. And 90% of the people go for short term, 2 years, 3 years. Now they can pay that same amount in the Provident Fund account in India. So it becomes their saving. It is not money lost. And that will become their pension or their security for the future. It will also earn them over 8% tax-free interest in their Provident Fund account. So they don't have to pay anything extra. The saving which that will happen because of the double contribution convention agreement, same amount they'll pay instead of UK, they'll pay in India. It's a level playing field now. Just like the UK employees can get pension, our people will pay in India and get pension or security in India. So it's level playing field. Even for UK, it's fair that the money should not be lost for people who are serving to help the UK economy. It's a win-win for both. And I've always said an agreement can only work when it's a win-win for both countries. And there can be no better example than the UK-India partnership, where we can support them in highly labor-intensive products at competitive prices of high quality, which will help the consumers of UK in a big way, which will save them from inflation and high costs, and which will provide lakhs of Indians jobs in India, which will provide a benefit to so many different sectors, which will further strengthen our education partnership, our technology and innovation partnership, our financial services partnership. And as the Honorable Prime Minister said, it will ease doing business, it will reduce cost of doing business, improve quality of products that we make in India, and increase the confidence of doing business between UK and India. A game changer in every aspect, a holistic, comprehensive trade agreement which is going to be an important stepping stone to many more agreements with other advanced economies, which sets the benchmark of high quality FTAs that India will be doing in the future, adding to India's credibility, confidence and competence. That, friends, is the India-UK FTA in a summary. Thank you.
Congratulations to you on the signing of this agreement. Just want to understand from you if this FTA or CETA will serve as a blueprint for the other deals that we are currently signing or working with other countries on, and the kind of messaging that it sends out to those countries.
I have always consistently held that every agreement stands on its own feet, and every agreement is negotiated based on circumstances in each country. And the effort is that our Indian industry gets preferential access over our competition. And I think this can become a gold standard to ensure that India protects sensitive sectors and opens the doors, particularly in areas where it's highly labor intensive, in competition with our other competitors in other countries, and allows high quality goods of technology and other products to come to India. If you will see, most of our FTAs are with countries where they don't compete with us on anything. I mean, UAE FTA, they send dates to India. That's not a competition because we don't have enough dates made in India. Australia competes with India in nothing. We complement each other. With the UK also, they'll be sending us, for example, products which we don't have enough in India, or wherever we felt that there was very sensitive advantage that the UK wanted, we respected their sensitivity. But in every respect, this is an agreement which opens far greater opportunities for India than any other agreement in the past.
Yes, Kirtika.
So Kirtika from the Economic Times.
Closer, mic closer, please.
Kirtika from the Economic Times. So how many MRAs are we looking at in professional services?
Well, we have not opened any discussions on legal services. So legal services has been kept out of this agreement. In other areas, as many professions as discussed with their regulatory counterparts. Every profession in India has a regulatory counterpart in UK. So chartered accountants, for example, already have a regulatory framework in which they work with UK, and they are making good benefit out of it. And there's a huge chapter of Indian chartered accountants, not only in London but in many parts of England. And probably everywhere I go in the world, I'm always received by chartered accountants from India and in large numbers, not small. So I think each individual profession can choose, architects can choose if they want to do a regulatory bridge with the UK. There is no compulsion on any regulator. They have to work amongst themselves.
Yes, please. Surabhi. Yes. Surabhi from Business Today.
Hello, sir. This is Surabhi from Business Today. Sir, just wanted to understand that in terms of operationalizing of the FTA, sir, what kind of a timeline can we expect?
India cabinet has already approved, so we are ready to operationalize. UK, the process goes through Parliament. But since most of the FTA was finalized when the other party, the Conservative Party, was in government, and the current party has not changed anything. They have continued whatever was finalized has been taken forward. I think there will be bipartisan support. So whatever the time it takes for them in Parliament, it could be a few months, it could be up to a year, I don't know. It's more a thing that the UK will have to sort out.
Deepshika.
So this is Deepshika from the Economic Times. So how soon are we expecting to conclude the investment part of the agreement?
A little louder.
What do you mean by that?
The investment, a separate investment agreement?
I wouldn't know. You'll have to ask the concerned department that.
राजीव जी, दैनिक जागरण.
सर राजीव दैनिक जागरण से. सर मेरा सवाल है कि अभी हमारे लिए एग्री में बहुत बड़ा मार्केट खुलने जा रहा है. एग्री एक्सपोर्ट के लिए किसान को बहुत फ़ायदा होगा. बट सर हमारा एग्री एक्सपोर्ट काफ़ी कम है अभी वहाँ, चूँकि यूरोप में हमेशा क्वालिटी कंट्रोल को लेकर काफ़ी बातें होती रहती हैं, और यूरोप में राइस पे पहले भी सवाल उठते रहे हैं, और हमारे कई ऐसे एग्री प्रोडक्ट्स हैं. तो ये चूँकि अगर हम ब्रिटेन में अपने एग्री एक्सपोर्ट को बढ़ाना चाहते हैं तो क्वालिटी पे खास ध्यान देना पड़ेगा. तो इसके लिए हमारी क्या तैयारी है? ये चूँकि तभी
इससे आज की प्रेस कॉन्फ्रेंस में इंडस्ट्री सेक्रेटरी भी बैठे हैं. हमारी चेष्टा है, और आप लोग सब जानते भी हैं, कि क्वालिटी के ऊपर विशेष भारत ध्यान दे. तो हमने क्वालिटी कंट्रोल ऑर्डर्स भी अलग अलग चीज़ों पे इसी हेतु से लगाए हैं कि भारत का माइंडसेट, मानसिक सोच अब क्वालिटी के प्रति ज़्यादा मेहनत करने की बननी चाहिए. तो मुझे खुशी है कि कई सेक्टर्स में लोगों ने अब सामने से आके बोलना शुरू किया है कि भाई हमारे प्रोडक्ट्स पे क्वालिटी कंट्रोल ऑर्डर लगाओ, नहीं तो या तो भारत में कुछ लोग बड़ी कचरा क्वालिटी बनाते हैं, या विदेश से कुछ लोग कचरा क्वालिटी इंपोर्ट करके भारत की मार्केट को खराब करते हैं. हमारी इच्छा है कि भारत में एक ही क्वालिटी बिके और वो अच्छी क्वालिटी बिके. मैंने कई बार आप लोगों को उदाहरण भी दिया है कि एक ज़माना था कुछ वर्षों पहले तक, जब मार्केट में कोई जाता था तो बोलता था भैया एक्सपोर्ट क्वालिटी का माल दिखाना, और वो उसी समय पे ज़्यादा था जब जो व्यक्ति ये वर्ड भैया यूज करता है उनकी सरकारें चला करती थी. लेकिन प्रधानमंत्री मोदी जी ने आते ही 2014 में एक संदेश दिया देश को, जीरो डिफेक्ट जीरो इफेक्ट. और तभी से हम भारत में एक मुहिम चला रहे हैं कि सस्टेनेबिलिटी हो, पर्यावरण हो, उसके प्रति भी हमें बहुत संवेदनशील रहना है, और गुणवत्ता हमारे भारत की सेवाओं की और भारत के वस्तुओं की जो भी हम प्रोड्यूस करते हैं वर्ल्ड क्लास होनी चाहिए. जैसे आप नोटिस करते हैं कि अभी सरकार के खुद के ऑफिसेस, अब सामने आपने तीनों बिल्डिंग देखी होंगी, बन गई हैं सेंट्रल सेक्रेटेरिएट की. ये बिल्डिंग में तो आप कई वर्षों से आ रहे हैं. अब पूरी सरकारी तंत्र, सरकारी ऑफिसेस भी इस पॉजिटिव माइंडसेट के साथ हाई क्वालिटी ऑफिसेस में फंक्शन कर रहे हैं. ये मोदी जी की सोच है। पार्लियामेंट देखिए, अब अपने खुद का हमारा एक मॉडर्न पार्लियामेंट है जो देखने देश विदेश से लोग आते हैं। नॉर्थ ब्लॉक साउथ ब्लॉक में माननीय प्रधानमंत्री जी दुनिया का सबसे बड़ा म्यूजियम की कल्पना कर रहे हैं और पुरानी बिल्डिंगों का काम वैसे वही होना चाहिए। तो अब भारत की सोच बदल रही है। आप गुरुग्राम जाओ, आप मुंबई में आके देखो, आप बेंगलुरु में जाके देखिए, हैदराबाद में जाके देखिए, जो आज क्वालिटी हमारे सर्विस सेक्टर ने दिखाई है और उस क्वालिटी के हिसाब से आज दुनिया भर में हमारा वर्चस्व है। सर्विसेज एक्सपोर्ट्स 380 बिलियन क्रॉस कर गए लास्ट ईयर, राइट? $380 बिलियन, तो 12% ग्रोथ था लास्ट ईयर। तो क्वालिटी हम लाएंगे तो ये सब चीजें, टेक्सटाइल, लेदर, फुटवेयर, जेम एंड ज्वेलरी, इन सब में अपार संभावनाएं हैं। No more questions?
Deepak Mandal ji.
Sir, this is Deepak Mandal from New Indian Express. Sir, as you said...
Deepak Mandal, New Indian Express.
So as you said that many sensitive sectors have been kept out of the purview of this FTA. So are we going to treat these sectors in a similar way?
Are we going to
treat these sectors in similar manner with other ongoing negotiations?
Maybe you've come to cover my press for the first time?
No, sir.
You've come before? Yes. I have often repeated, and I said it today also, I think. Every free trade agreement stands on its own legs, has its own dynamics, and has its own sensitivities, defensive and offensive interests. For example, take automobiles. There was a time we couldn't do free trade agreements with many countries because we just kept thinking we should not open the automobile market at all. Correct? And उस चक्कर में FTA नहीं कर पाए. And my own thinking is we have lost so much opportunity and lakhs and lakhs and lakhs of jobs, maybe crores of jobs, for the lost opportunities because we just kept a closed mind. But look how intelligently we have opened the automobile in this agreement. Have you all gone into it with detail? So for internal combustion engine cars, that is petrol and diesel cars, we are going to open over 10 years, gradually increase the quota from a small number, I'll just give you the number, to a maximum of 37,000 after 10 years. After 10 years, India will be selling maybe a crore vehicles at least. आज भी 50 लाख बेचते हैं, तो 10 साल बाद 1.5 करोड़ होनी चाहिए मेरे हिसाब से, जिस तरीके से आमदनियां बढ़ रही हैं। उसमें 37,000 व्हीकल्स पेट्रोल की 10 साल बाद 10% ड्यूटी पे आएगी शायद। या फर्स्ट ईयर में 10,000 कोटा दिए, आस्ते आस्ते बढ़ते बढ़ते 5वें साल में 19,000 हो जाएगा इन कार्स विच आर मोर देन 3,000 cc. Cars from 1,500 to 3,000 cc petrol and 2,500 डीजल एंड 3,000 cc पेट्रोल, ये चार्ट आपको दे देंगे, उसमें 5,000 कार्स और टोटल कोटा 20,000 कार, और वो बढ़ते बढ़ते मैक्सिमम होता है 37,000 कार्स 5वें साल में, नॉट 10th, 5वें साल में। 6ठे साल से हमने इलेक्ट्रिक व्हीकल्स का थोड़ा थोड़ा कोटा देना शुरू किया, और जितना इलेक्ट्रिक व्हीकल कोटा दे रहे हैं उतना पेट्रोल का कम कर रहे हैं, पेट्रोल डीजल। तो एट नो पॉइंट ऑफ टाइम we are giving a concessional duty quota more than 37,000. तो 16वें साल में 15 साल के बाद 15,000 गाड़ियां पेट्रोल डीजल और 22,000 गाड़ियां इलेक्ट्रिक 15 साल बाद. That's the maximum quota we are giving at concessional duty. और उसमें भी देखिए हमारी समझदारी, इलेक्ट्रिक कार्स में 22,000 में 20,000 का कोटा 80,000 पाउंड से महंगी गाड़ी हो गए. 80,000 पाउंड की गाड़ी यानी 1 करोड़ रुपए की CIF वैल्यू की गाड़ी. तो 1 करोड़ रुपए की CIF वैल्यू की गाड़ी जब भारत आएगी उस पर 10% ड्यूटी लगेगी, तो 1 करोड़ 10 लाख हो गई. फिर यहाँ पे लॉजिस्टिक्स कॉस्ट, मार्केटिंग कॉस्ट, सर्विसिंग कॉस्ट, सब कॉस्ट लगेंगे. तो जो 20,000 का कोटा दिया है वो लगभग ऐसी गाड़ियों पे जो 1.5 करोड़ रुपए की यहाँ बेचनी पड़ेगी, जिससे हमारे लोकल मैन्युफैक्चरर्स को कोई रत्ती पर भी उनको इम्पैक्ट नहीं पड़ेगा. वैसे तो मेरा तो मानना है थोड़ी स्पर्धा अच्छी होती है, क्योंकि 140 करोड़ कंज्यूमर्स भी है ना. 140 करोड़ कंज्यूमर्स का भी तो किसी ने सोचना पड़ेगा. एक जमाना था हमारे पास ऑप्शन सिर्फ फिएट और एम्बेसडर थे, उसके बाद ऑप्शन हो गया मारुति और 2-3 और कंपनियां. थोड़ा हमने भी ओपन माइंड से सोचना पड़ेगा. 140 करोड़ कंज्यूमर की भी चिंता करनी पड़ेगी. पर ये चार्ट हिंदू को जरूर दे देना भैया, सो दैट वो ठीक से कवर करे. हिंदू ने कुछ प्रश्न नहीं पूछा. सरप्राइजिंग.
Sharad, is he there?
We have no question at all. Any concern? I wish you had clarified that question that you have written about processed foods, because I was so amazed कि इंडिया में चॉकलेट्स आएंगी यूके से तो शुगर की प्रॉब्लम होगी, समथिंग लाइक दैट. एम आई राइट? तो मतलब वो तो FSSAI का काम है, जो भी हार्मफुल चीजें हम भारत में आने ही नहीं देते हैं, और जो भारत में बिकती है उसमें कंज्यूमर को चॉइस मिले तो उसमें क्या बुरा है. तो मैं पढ़ के मैं खुश हुआ कि पूरे यूके FTA में कुछ और मिला ही नहीं क्रिटिसाइज करने को, एक्सेप्ट कि चॉकलेट्स अब भारत में आएंगी या प्रोसेस्ड फूड्स कुछ भारत में आएंगे. पर आई विश यू हैड क्लैरिफाइड इट विद मी. Any other question? Yes. Most welcome. I'm happy to.
Sir,
answer.
Reuters is having a question.
Yeah, most welcome. Reuters can also ask me.
Thank you, Manoj Kumar.
I addressed Reuters in London also. By
yes, sir. We had an interview like that. Thank you so much, sir. Sir, in your statement and in the papers, like so, you have described nearly 99% of our exports will be
get preferential access. Yes.
Access. So, sir, wanted to understand from you, and now Secretary sir is also here. So we have elaborated the many sectors like textile, furniture, footwear, etc. So which could be the number one, like which could be the major companies in your sense, like?
Stock market sensitive information.
No, sir. Secondly, if you permit, like sir. So, sir, like sometimes the issue of cost comparative advantage has been. We have addressed the issue of tariffs, like, but there may be some other issues on the cost comparative advantage.
Our doors are open. If you have any suggestions or if any industry has any issue on cost competitiveness, our doors are open. We are happy to address those issues. Prime Minister Narendra Modi has announced, Nirmala ji announced in the budget, the National Manufacturing Mission that is going to specifically take up such issues where cost competitiveness needs to be improved. Our doors are open and we'll work with industry to make our manufacturing more cost competitive.
And if you permit to ask a supplementary question.
Most welcome, sir.
Thank you, sir. Sir, even in the budget, like, so there was a proposal of like nearly to remove this agriculture cess on number of commodities, like, so which
I'm not
like
aware of what proposals are there, but I wouldn't know much about the budget. That you'll have to ask finance.
Thank you, sir.
So there are more questions.
Yeah,
right?
sure.
Siddharth.
I wanted to prod some more questions. That's why I raised that issue. I have nothing against a particular paper, but I was glad that they raised that issue. तो उससे मेरा माइंड एकदम क्लियर हो गया कि और कुछ आपको मिला ही नहीं पूरे एग्रीमेंट में.
Sir, I have a question. So what were the reasons that, what are the reasons currently that our trade with the UK is so low? It is 1.9% or both export and imports. And while we've set a target of doubling it by 2030, what is the kind of share of, UK imports are we looking at? Has there some analysis been done?
According to me, the sky is the limit even in the future. In the past, I have observed that these developed countries, by and large, used to keep a higher import duty on labor-intensive products. My observation after studying the various countries' tariff schedule.
Early Sunday.
Into that bracket with UK. So with the duty of, and I read out the duty, these are high duties, textile at up to 12%. You don't have that much margin in that industry. In transport, auto parts, up to 18%. You don't have that much margin. So when these duties all become zero, we become very, very much more cost competitive. So I've requested Industry Secretary to be here, because and I'm going to meet every sector. You are welcome to come and join us in the next few weeks. Every day I'll be meeting one sector to discuss with them what you asked me, sir, about their own ability to compete, to scale up, to expand capacity. So far, the mindset has been more domestic. Our industry has looked at a large and fast-growing domestic market and have been satisfying the domestic market. Now we want industry to grow by leaps and bounds, which is why we have even changed the definition of MSME to allow a little faster growth even of the MSMEs. Even though fortunately in the MSME definition, export turnover is not counted. So it opens the doors to MSMEs in a very big way to capture this opportunity. And Commerce Ministry is soon coming out with some new ideas also. For example, we are going to, like we are doing the warehouse Bharat Mart in UAE, we are going to look at other countries where we can support warehousing of Indian goods. We're going to look at other measures to brand the quality of India's products worldwide. So Commerce Ministry is now focusing its attention on marketing and taking our Indian manufacturers to the advanced and developed countries. Yes.
Amity. Hi sir, Amity from Business Line. Given the fact that the UK FTA is opening up this big opportunity.
Hand mic the teacher.
So this India-UK FTA, it is opening up this big market for our industry, especially for the labor-intensive sectors. So given the fact that some of the past FTAs, the utilization has been low. So for this FTA in particular, would we look at some hand-holding measures or something for it?
Yes, absolutely. And that is why my Prime Minister, Shri Narendra Modi ji, has already instructed me to talk to specific industry segments where we become far more competitive now. And I'll be having sectoral meetings with every sector till Parliament goes on, when I can't leave Delhi. And after that, we're going to all the states to, for example, share with the Bhagalpuri silk people of Bihar the new opportunities that have opened up, or to share with Jammu Kashmir Pashmina shawl manufacturers or silk manufacturers or kesar producers. Simultaneously go to Odisha and Andhra Pradesh, Tamil Nadu to talk to the fishermen about the opportunities that this opens up for them.
And that was Commerce Minister Piyush Goyal on India-UK FTA. The FTA is in fact Britain's biggest trade deal since Brexit. During the press conference, Piyush Goyal said that the India-UK FTA is a zero-compromise agreement. We will continue to give you a lot more updates on NDTV Profit. Stay tuned, and as we slip into a very, very short break.
Welcome viewers.
This is a call for disruptor show flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Earnings highlighting a decline in asset quality and subdued profitability that affected the quarter's performance. The bank's net interest income for the quarter rose by 6% year-on-year, accompanied by fresh slippages of about 1,812 crore in the June quarter. To give you a lot more highlights on how the results went by, Kotak Mahindra's NPA rose to about 0.34%, which is on a quarter-on-quarter basis. Although the net profit also increased by 7%, on a year-on-year basis, it was 47% because of that one-time impact that it had in in the same period last quarter. But if you compare the net profit jump on a sequential basis, that grew by about 7%. Although on an overall basis, Kotak Mahindra Bank's Q1 results for FY26, which is the April-June quarter, that sort of missed estimates. A lot more, reflection of the weakness was seen in its non-performing assets as well, as the non-performing assets rose by 1.48% for the quarter on a quarter-on-quarter basis as well. Deposits rose by about 4.9 lakh crore rupees, and the net interest margins also grew by 4.65%. Now, came in at actually 4.65%. Now, the net interest income is basically the income that a bank generates as a difference of the interest that it charges on the deposits versus the interest that it makes on the loans that it gives, and therefore this as a percentage of its loan portfolio came in at 4.65%. Kotak Mahindra Bank's NII, which is the net interest income, also increased by 6% annually, and the net interest margin rose by came in at 4.65%. As I was saying, provisions also rose dramatically. In fact, provisions rose by about 109%, sort of indicating that the bank before we give you actually a lot more highlights, let's cut across to Kotak Mahindra Bank's presser on Q1 FY26 earnings.
Is in us. Every initiative, every product, every platform we have launched
is designed to serve our customers better, and this quarter reflects that focus. Let me start with the banking business, where we continue to deepen customer relationships across segments. Our combined SME book continues to grow strongly as we focus on the holistic wallet of the customer. We are investing in platforms like Fin and our mobile banking app to enhance experience and functionality. For our affluent customers, we have formally launched Solitaire, a premium proposition that brings together the best of Kotak across investments, protection, credit cards, personal and business loans, all on a pre-approved basis for the customer. Solitaire is being well received in the marketplace, and we believe it's one of the finest premium propositions in India today. Our 811 business has come back strongly this quarter. The new 811 app is seeing healthy migration and continues to be a key source of granular, low-cost deposits. It is a proposition that resonates deeply with the aspirations of core India and allows us to acquire customers at scale and cross-sell effectively. Credit cards fulfill a very important need for our target customers, and we have launched new card products, Solitaire and Kotak Indigo, to cater to our customers' needs, with more initiatives lined up in the next few quarters. The onset of a good monsoon augurs well for our rural portfolio. There has been some stress in the retail CV segment, and we shall continue to monitor this very closely. Like I said, we've seen a peaking of our credit costs in the MFI portfolio, and with incremental slippages on the decline, we have cautiously resumed fresh disbursements in microfinance. Our capital market businesses had a strong quarter, despite the broader market environment remaining relatively subdued. Kotak Securities continued to gain market share in both cash and derivatives, and our investment banking arm seems a very healthy pipeline as corporates tap capital markets. In our asset management businesses, we have seen continued strong performance with 25% year-on-year growth in average assets under management. This reflects our ability to capture the shift from saving to investment. Our strategy is clear: serve each customer segment with relevance, agility, and trust. Let me now hand over to Devang to walk us through the financial numbers.
Thank you, Ashok. Good evening, friends. Let me start with bank standalone highlights. Bank's PAT for Q1 26 was 3,282 crores. Net interest margin was 4.65%, down largely due to a repo rate cut. Net advances of the bank grew at 14.1% YOY to 4,44,823 crores at 30th June, whereas the average net advances for the quarter also grew around 14.7% YOY. Total deposits of the bank grew to 5,12,838 crores for Q1 26, up 15% YOY. Within deposits, current account and fixed rates are growing at 16% and 9% YOY respectively. CASA ratio at 30th June stood at 40.9%. Credit to deposit ratio at 30th June as 86.7%. At 30th June, GNPA was 1.48% and net NPA at 0.34%. Provision coverage ratio stood at 77%. Credit cost for the quarter was higher at 0.93%, mainly due to MFI and retail commercial vehicle segments. Capital adequacy of the bank remained healthy at 30th June at 23%, of which CET1 ratio itself 21.8%. Now let me share the highlights of consolidated numbers. Consolidated PAT for Q1 increased to 4,472 crores. Consolidated customer assets grew 13% YOY to 5,57,369 crore at 30th June. Consolidated ROA was 2.03% and ROE at 11.13%. Consolidated capital adequacy as per Basel III stood at 23.7%, of which CET1 itself 22.7%. Consolidated net worth of the group at 30th June close to 1,65,000 crores, and the book value of the share at 30th June at 829 rupees per share, up 17% YOY. Coming to the key subsidiaries performances, Kotak Securities, which is into the broking business, recorded Q1 profit of 465 crores, up 16% YOY, with improvement in market share as well. Kotak AMC and the trusteeship company recorded a profit of 326 crores, up 86% YOY growth, with a 24% YOY increase in equity average AUM, which now is 3,32,638 crores. Kotak Prime customers grew at 16%. Customer assets grew at 16% YOY to 41,400 crores, and PAT at 272 crore, up 17% on a YOY basis. Kotak Life ended quarter with a PAT of 327 crores, up 80% on a YOY basis. At the end, the current quarter's group performance actually reflects the strength of our conglomerate model, as evidenced by the strong growth in our capital market and AMC businesses, and non-bank entities now contribute 34% of the group profits for the quarter ended 30th June 2026. Thank you.
Thank you, Devang, and thank you, Ashok. We're now ready to start our Q&A session. Let me start with some instructions before we do that. Questions will be taken on a first-come basis. If you have a question, please use the raise hand feature on Zoom. Once I call upon you to ask your question, please unmute yourself. Please state your name and the organization you represent, if I haven't done so, before asking your question. Do remember to mute yourself once you've asked your question. We request that you keep your questions brief and to the point to allow time for as many questions as possible. If you encounter any technical issues during the conference, please reach out to the Kotak PR team or the Weber Shandwick team for assistance. Please note that the chat function will be disabled during the duration of the event. With that, let me start with the first question from Vishwanath Nair from NDTV Profit. Vishy?
Right. Mr. Vaswani, the first question is with respect to your credit card portfolio, specifically 12% reduction year on year. I wanted to understand, despite the removal of the RBI's restrictions on credit card onboarding, why this number has not gone up, even sequentially it's gone down. And on the second part, you spoke about microfinance, that microfinance business is starting to cautiously start doing business. Outstanding has been consistently coming down close to 6,000 crore now. What is the outlook on that? And lastly, if you can allow me, I wanted to get a sense of why this elevated provisioning happened in Q1. It's gone up from 900 odd crore to close to 1,200 crore now.
Yeah, Vishy, thanks. See, on credit cards, clearly, all of last year, we couldn't issue any credit cards. And therefore, as you would know, as you don't issue new credit cards, the outstandings kind of come down. And then we started issuing credit cards after the embargo, so in the first quarter of this year. It takes a bit of time to get the engines kind of going, and that's what we've been going through. With the launch of the new product, particularly Solitaire, and the relaunch of the Indigo card, I feel pretty good about getting back into a good positive trajectory on cards. This is a business which is very special to us, and we'll pay a lot of attention to it and hopefully come back to seeing nice growth. Also in this quarter, we've had a number of cards which were dormant or not active, and therefore we just had a bunch of cards which we had to close, and that reflected in the card numbers. But over the next couple of quarters, I think you'll see our card business come back quite well. On MFI, like I said, Q1, we think credit costs have kind of peaked and we have selectively started going back. Now, the MFI book is a typically 24 to 30 month kind of book, and therefore it obviously runs off pretty fast. Currently, the new disbursements we are doing is in or about the same level of runoffs. So the book will kind of stabilize and start climbing again once disbursements pick up. So that should be more towards the second half of the year. And your third question around elevated provisioning, literally in retail unsecured credit, it is all kind of rule-based. MFI, the kind of portfolio that had flown into the 90 and 180 DPD got provided for. Ditto the same thing with retail commercial credit. So it's just a matter of following the rules and providing as per those rules.
Thank you, Ashok. Sorry, Shanti, you want to add to that?
No, I just wanted to add to the last question, which was really about the spike in credit costs. I think two key factors. One is microfinance, and the second is retail commercial vehicle. I think microfinance, as Ashok has said, we believe that the delinquencies have peaked and probably we'll see stabilization from here on, and maybe the second half of the year, you should see it improve much better. As far as retail commercial vehicles is concerned, I think this quarter we saw a spike. It's really the slowing macro playing now, reflecting in the micro. We have in the last 2 quarters called that we are seeing a slowdown. But however, in this quarter, we saw a spike. And having said that, it is an important business segment for us. And the ROE of the business, even after the risks costs, are quite good. So we will dynamically manage the spike as we see into the next few quarters.
Thank you, Shanti. I'll move on to the next one from Ritu Singh from CNBC TV 18.
Hi, everyone. Just, to follow up on a couple of things. In the asset quality, could you give us a sense of what, for the full year, you expect this to be, given the stress you're seeing in the retail CV segment and the MFI business, where you're saying you expect some sort of an improvement in the second year? And even on your unsecured book, we've been seeing it going down. You've explained some of the reasons, but you had earlier indicated this ambition, or rather this target of wanting the unsecured book to grow in mid-teens to get there. Is that still, what you wish to do? And even in the loan growth, while it was strong at 14%, the bulk of it was still driven by corporate banking, not so much consumer banking. So a word on that as well, whether that will be the trend we continue to see going ahead as well. And if I may add a word on margins, a 32 basis point decline. I know Devang said it's largely a function of, the RBI rate cuts. But do you see levers for improving this going ahead? Thank you.
Wow, that's a lot.
6 questions in one.
Yeah. So on the credit costs, I think we've kind of covered it, right? Look, microfinance contributed most of the increase. We believe it's kind of peaked. It will be coming down from here on, exactly like Shanti said. Yes, we did see stress in the commercial vehicle business this quarter. Like Shanti said, this is partly or mainly due to the macroeconomic kind of environment. This is a very good business. It's a good business for us, 10% of our loans virtually, and has delivered very good ROEs over the year. We'll manage, this is really the retail lower end segment, which we'll have to manage, and we'll manage that through. As far as cards and PL is concerned, PL, we are continuing to grow. As you know, we did the acquisition of Standard Chartered, and that growth will kind of continue. Credit costs are well under control, and we feel comfortable. And credit cards will kind of come back, like I mentioned. Let me leave the NIM question to Devang.
Yes, hi. You're right. I said about the NIM reduction largely due to repo cut, and which is expected with a 1% cut over 1 year last, and with your 60% of the book, which is a repo linked book. So the impact happens on an immediate basis. whereas the repricing of the deposits. So of course, bank has taken measures in terms of, as you know, reducing the saving account rate interest, also reducing the rates on the term deposits, as well as we are expecting the benefit of the repo rate, the CRR cut, which will flow in from September over a period of time. So I think it is largely a timing difference. While the earnings get cut upfront, as the deposit gets repricing, I think it will even out during the rest of the year over a period of time. So that's what I think the NIM trajectory and the reasons are.
I'd like to address, Ritu, your point on asset growth. If you look at across the assets, and if you look, the consumer side has also grown across mortgages, which is both home loan LAP, business banking, which is the small SME, and personal loans and business loans have all grown. So if you look at X personal loans, X cards, right, and consumer durables, you will find that our consumer banking assets across all of that has grown. In the corporate side, actually, it's largely SME and mid-market. There was some migration done from SME book to a few reclassification within the corporate bank to enable us to serve the customers better. But the growth in the corporate side has been driven by our SME and mid-markets businesses, which are very important cohorts for us from a 360-degree customer perspective. So it is not just the corporate bank that's grown. Both consumer, SME, and mid-markets in corporate have grown this quarter.
Thank you, Shanti. We'll move on to the next question from Ankur Mishra from ET Now. Ankur? Ankur, you're still on mute. If you want to unmute yourself.
All right. So that was the results conference. It's still ongoing, of course, where the management of Kotak Mahindra Bank is explaining what exactly happened during the quarter. If you were to look at the net profit figure, of course, last year they had a one-time sort of a boost on the net profit because of the sale in shareholding in the insurance arm, which was sold to, of course, Zurich. After that, there was a one-time benefit that was given in that quarter. So therefore, the year-on-year comparison may not be appropriate. Having said that, even adjusting for that one-time benefit, the net profit has dropped about 7% odd. That is indicative of the higher provisioning or higher credit costs that the bank has seen, and the bank has clarified, of course, that this higher provisioning is coming because of defaults in the microfinance business, which has been a long pending problem, and also on retail commercial vehicles. That's an important part. You know, retail commercial vehicle is seeing a hit because of the broader slowing down of the macroeconomic conditions. And that's leading to Kotak Mahindra Bank seeing elevated provisions of about 1,200 odd crore and slippages of about 1,800 odd crore during Q1, which is adding to that stress point. The other part, which was interesting to me, which was on the credit card growth portfolio, there, of course, Ashok Vaswani saying that this is a business that we like and we want to continue growing that business. They want to see a good growth on that business. I don't quite understand what good growth is because he didn't specify the ratio at which that book should be growing. But there's been a general sort of understanding that credit card and personal loans have been growing slower for private banks across the board. So how Kotak Mahindra Bank is able to utilize this for a future growth period and expand that book, that is something that we will closely watch out for. I'll go back to you, Malika, back to you in the studio.
Right, Vishwanath. Thank you so much for that and wrapping the key highlights of the conference. We spoke to Akshay Jatia of Westlife Food World viewers about their outlook and what will drive their growth ahead. Listen in.
Well, if you thought you could not imagine the words protein content and a McD burger in the same line, think again. Today, I'm in conversation with Akshay Jatia, CEO at Westlife Food World, and he's going to be talking to us about McD's latest offering. Thank you so much for taking time out to speak to us at NDTV Profit, Akshay.
Thank you so much. Thank you for having me.
So, first up to begin with, tell us a little bit about your latest offering and what you hope to achieve with it.
No, so I think that's a great question because our intent and objective is to make sure that McDonald's remains an everyday use case for our customers. I think customers have become a lot more exposed, educated in terms of what they are eating, and they are demanding transparency, nutritional content being, wholesome and nutritious. And I think that's something that we actually have always appreciated, and we've always taken the first step. So in terms of this journey that we call Real Food, Real Good, this is one more intervention where protein has become increasingly important in our diet, and actually Indians are quite protein deficient. So in order to bridge that gap and make McDonald's relevant to bridge that gap, we've launched this protein slice, which is a 15-gram slice and has 5 grams of protein. So more than 30% actually of the nutritional content comes from protein, and that's not something easy to do. And we've done this in partnership with the CFTRI, which is India's premier food technology institute, to make sure that what customers are getting is, top of the line in terms of nutritional content. So I think we're very excited, and we feel that this is going to drive further occasions at McDonald's in the years to come.
All right. Tell us a little bit more about whether it's the first of more such products we can see in the offing. And adding to that, also tell us a little bit about what you see the in-store demand outlook for the coming year.
So, like I mentioned, this is part of our journey. As we call it, it's called Real Food, Real Good. And there are multiple steps we've already taken in the past. So we've reduced sodium content, we've reduced oil from our mayonnaise, we've made the aloo tikki, which is one of our most popular burgers, into a balanced meal. Last year, most importantly, again in partnership with the CFTRI, we launched the multi-millet bun. And this is one more step, again, like I said, to make sure that our food is wholesome and nutritious, and we are transparent about it and partnering with our customers to ensure that they're getting what they want when they eat outside.
All right. What is the outlook in terms of store addition plans for the year? And is there any specific sort of demography or location that you are going to be targeting?
So as we've maintained, Vision 2027 is our guiding light, and the plan is to open roughly around 580 to 630 restaurants by then. Last year and last financial year we delivered 46 new restaurants. We should remain on a similar trajectory of 40 to 45 restaurants in the coming financial year as well. But again, the endeavor is to get to the numbers that we've promised in our Vision 2027 document. There is a lot of opportunity in our country, and we do feel that with interventions like this, making McDonald's more relevant, making nutrition more accessible at our locations, customers will visit McDonald's more often, and that itself will allow us to expand our presence even further.
Okay, so we did see in your latest earnings, we did see a dip in net profit. Can you tell us a little bit about that, and also what is the outlook for the top line as well as the bottom line for FY26?
So I think, we've had a pretty challenging past couple of years in terms of, macro as well as the QSR category. As a company, we've been putting, very strong efforts now, and the last 3 quarters have delivered positive same-store sales growth. I think actually from a profitability point of view at a restaurant operating margin level, we delivered improvement despite the challenging environment. So I'm quite proud of the fact that we've been able to unlock operational efficiencies despite subdued same-store sales growth. Moving forward, like we've maintained in all our commentary, we do anticipate an improving trend and trajectory in terms of our same-store sales growth, and that itself should deliver, the growth that we require in terms of sales as well as our EBITDA margins.
Got it. One last question before we can let you go. You did touch upon the challenging macro environment that we have been seeing in terms of demand, in terms of consumption. Can you elaborate a little bit on that? And do you see an improvement currently and going forward?
So, it's been a hot topic across all forums, all publications. But I think that what we have been seeing recently is that inflation has started coming off. There are a lot of measures that have been introduced by the central government and state governments in terms of stimulating demand. So we are quite confident that the macro will only improve now onwards. And I think, we want to take this on the front foot. We want to, operate in a gain frame, as we call it, which is to take advantage of these tailwinds, but at the same time use our differentiated strategy to continue to drive visits to our restaurants. And there's a large market that's available in terms of people eating out, which will allow us to, continue to deliver the aspirations that we have, as well as the targets that we've set ourselves.
Thank you so much for taking time out to speak to us at NDTV Profit.
Great. Thank you so much.
Thank you for watching.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency.
Hello and welcome to Voice What presents the great business story, transforming India in association with NDTV Profit. Decor is one of the world's largest manufacturers of soft furnishing fabrics, with its manufacturing units creating over 1,20,000 meters of high quality fabrics every day for homes across the world. Joining me now is the Managing Director Ajay Arora and Creative Director for Decor Home Fabrics, Simon Arora. Thank you so much for joining us to take us through the journey of Decor and Fabricaire as a globally local brand that bring the philosophy of beauty and performance to life. What I'd like to talk about is ask you to take us through this incredible journey of Decor and Fabricaire, which are globally local brands and bring to life the philosophy of performance and beauty.
The first, game changer has actually been my marriage with Simon, and my entry into the world of design and home through this association. And after that, there was a failure of my current family textile business of apparel. So that was the second game changer for me. Then moved on, me and Simon, we built an excellent manufacturing platform and design partnerships with the best in Europe. After spending a decade doing this, we thought that we were ready now to address the Indian market. This was about 2010 that we decided to approach the Indian consumer with our promise and our capabilities. We became the first player to use a Bollywood couple, Mr. Shah Rukh Khan and Gauri Khan, to help amplify our messaging and to bring a true connect of how a beautiful home is actually lived. And we tried to ensure that our product, which is already up to the mark, is actually delivered to the consumer in a manner which is never seen before. We built a digital platform, we built robotic warehouses, and then ensured that retailers and our channel partners could be proud of the Decor brand. We created a pull demand. We make sure that people were spoiled for choice. We rolled out 6,000 SKUs, a buffet where everybody's design and functional needs can be met. And the delivery was 98-99% within 24 to 48 hours, and the retailer never kept stock. And because we had the experience of export, again, I would say we're now delivering through Fabricare, a separate brand. And since there's a huge move towards premiumization, we said that there's D-Decor, that stands for beautiful product, you're spoiled for choice, and now you're Fabricare, which is beautiful and performance.
As creative director and co-founder, how do you balance innovation and timelessness in D-Decor's collections, especially when you're launching over 20,000 SKUs every year?
Innovation for us is not trend-driven alone, it's rooted in relevance, functionality, and an emotional connection to the consumer. At the same time, we have a deep respect for timeless design. We draw from classic elements like heritage weaves, natural palettes, and enduring craftsmanship that never go out of style. The magic really happens when we reinterpret these traditions through a contemporary lens, creating collections that feel current yet timeless. Our goal is to design products that not only elevate homes today, but remain cherished for years to come.
With exports to over 65 countries, multiple manufacturing facilities, how do you maintain a sense of consistency, quality and brand identity across such a massive scale?
First choice that we made was that we want our manufacturing platform to be integrated and under our control. Second strategic choice we made is we wanted to create a spread of assortment, maintaining quality and beautiful, attractive things. The third choice we made is that we would like to ensure that we spread, like you said, across various countries so that the demand, even though you have spread a lot of product, but you've also spread a lot of customers, it can get aggregated. And then we wired everything, the whole platform with IT. Simon's team consistently ensures that all of this is chosen very qualitatively and thoughtfully. Our whole brand and marketing team is, sitting under her aesthetic editing to ensure that a beautiful product is presented beautifully. So the short answer is strategic consistency.
What inspired D-Decor to invest in digital assets so early on?
If you've done technology adoption, if you've done connection between all your different technology, different platforms, and then you have got AI sitting now on top of it, I think you can serve all your stakeholders in a very exciting, seamless manner. And you can give them a personalized experience. It's helping our people understand and express better. Bidirectional communication is done through interconnected platforms. That's why we feel that digital innovation is extremely important. We are trying our level best to use technology to make our factory worker, our teams' lives better. That's why we're using technology.
Fabricare is a bold step into high-performance fabrics. What gap in the market were you looking at addressing? And how does this reflect the future of functional luxury?
Our clients wanted fabrics that looked exquisite, felt luxurious, but also stood up to real life. Modern homes are dynamic, and our furnishings needed to be just as resilient. The performance line was introduced to create practical functionality along with aesthetic beauty. These fabrics are engineered to be stain resistant, fade proof, and easy to maintain without compromising on softness, hand feel, or elegance. What makes them unique is that they stand out. They look and feel like luxury, but they live like performance.
With such a large global footprint, how is D-Decor rethinking its processes, sourcing, and materials to be more environmentally sustainable?
Through our partnership with IKEA, we have found an appreciator of sustainability like no other. So we built the competency inside in choice of materials, in modification of sources of energy. We were told by IKEA to go coal-free by 2025. We did it in 2022. And our case was showcased by IKEA to all Indian vendors that if this company is able to do it, why are you not able to do it? So we decided to make be a leader in that space. We recycle 100% of our water. We are able to ensure that the sludge that goes out of the water goes into a boiler and provides thermal energy. The messaging and the communication to India of sustainability that we chose is performance. Because if a product lasts longer, there's less waste. So if you build quality in a product, it's sustainable.
How did you approach the designing part of a high-tech product range without compromising on the sensory luxury that Decor is known for?
From the start, we were very clear. Performance couldn't come at the cost of luxury. We worked closely with some of the world's most advanced textile mills and innovation labs to develop finishes and fibers that deliver durability. Our team spent months testing yarn blends, experimenting with weave structures, and refining finishing techniques until we achieved the perfect balance. The result is a collection that feels as rich and indulgent, but performs beautifully under real-life conditions.
How do you see the Decor ecosystem evolve in the next 5 to 10 years?
We will serve more personalized product in the future to our channel partners, architects and interior designers, who will then convey back to us through information exchange their personalized needs. So we'll have to build to order. We'll have to build faster. How are we going to do it? It's a work in progress. We have to rewire system, people, and I would also say the business model. There is going to be, AI, which helps us understand what our consumers want individually. So you can have chatbots talking. All of that is already done. It's very available. Now it's the time to redraw the entire blueprint. So that's what we're working on. It's a bit of a work in progress, but it is going to be game changing.
Consumer tastes have changed drastically over the last few years. How has Decor stayed relevant since its beginning till now?
We pay very close attention to emerging lifestyles, shifts in consumer values. Despite constantly innovating, we've stayed true to our core, which is impeccable quality, refined aesthetics, and meaningful craftsmanship. What truly sets us apart is our ability to anticipate what's next without ever losing sight of who we are. That's what keeps our brand not just relevant, but aspirational.
So beyond business, both of you have also been involved in philanthropic work, especially in education. How do these values tie into Decor's philosophy of live beautiful?
And education is very empowering. So I think the connect of wanting everyone to live beautiful is allowing the ones who cannot afford a better education but yet deserve it, is where we step in and try to do our small little part.
What's your shared vision for Decor and for Decor's future? And also not just as a fabric brand, but as a global lifestyle and design powerhouse.
We want to create a holistic design universe, from furnishings and accessories to spaces that inspire how people live, work, and feel in those environments. Our goal is in shaping homes, hospitality spaces, and commercial interiors across the world with fabrics that don't just dress windows or furniture, but elevate the way people experience spaces.
Our vision is definitely to be a design platform of products and services that will help everyone live beautiful and perform better.
Thank you so much for your time, and here's wishing you all the best. And that's a beautiful philosophy, live beautiful. So hoping that it only gets bigger and better from now.
Thank you, Saurabh.
Thank you very much.
Welcome viewers. This is a call for Disruptor show flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national daily.
Hello and welcome to VoiceSpot presents The Great Business Story Transforming India in association with NDTV Profit. Now our guest today is a global leader in electrical test and measurement and also automation solutions. Let me introduce to you, we have with us Mr. Narendra Jorimal Golia. He's the founder and executive chairman of Rishabh Instruments Limited. It's really a pleasure to have you with us, sir, on NDTV Profit.
Thank you so much.
To begin with, I think we have to ask you about your journey, which started way back in 1982. As the founder, the vision back then, and how has it evolved? Take us through your journey, please.
Yeah, it was nearly 40 years ago, little more than 40 years ago that we started. And the journey of Rishabh Instruments is the journey of India. India was the closed economy. We were nowhere competing in the world. India did not have a reputation for supplying quality products. And therefore, we had to come out of all these challenges to be able to make products in India, for India, and then export it to the world. Today, we all talk about make in India, made in India, but we started way back in 82. We started with a collaboration with a company called BBC Metrawatt. It was part of the present ABB group. Once we established the product, we went on expanding the basket from voltmeters, ammeters to maximum demand meters. We started exporting back to our collaborators, and that was a turning point. L&T started marketing these instruments. And as soon as we established one product line, we said, okay, now what next?
Yeah.
So we went and got another collaboration from Germany itself for multimeters. So we went on expanding the product range into electronic products on one side. On the other side, we started exporting to various countries, and on the third side, we opened our R&D center in Nashik. Similarly, when we were very good at the Indian market, European people did not still accept made in India, so we set up a manufacturing hub in Poland. Actually, we acquired it from the government of Poland. And there were a lot of challenges, but God willing, inshallah, jo bolte hain, ki we were able to.
It worked out well.
It worked out well. Everything worked out well. And then there was a lot of exchange of knowledge between Poland and India, and so do the other countries in UK, USA, China. Today we have one facility in Czech Republic. So it went on expanding.
How you integrate diverse cultures, like you said, you had your set of challenges, but integrating diverse cultures as well as technology into one cohesive, innovation-driven organization. I think that would be really interesting. Please share that.
Not easy at all, especially culture. Slowly, step by step, it was a great journey. We taught those people our culture, we asked our people to learn their culture. But most important was the R&D which was being developed. People enjoyed working with Indian engineers, and our engineers enjoyed working with their engineers, learning their way of doing things, to do it efficiently, to really come up with new technologies which were measuring the quality of power. So we went on doing that, and today I can say every 2-3 years we make our presence felt in one new country, whatever that country is.
It's amazing, yeah.
So today we are present in 20 countries, and hopefully tomorrow we'll be in 30-40 countries.
Well, Mr. Kohli, I want to ask you, obviously Rishabh Instruments is known for, vertical integration as well as in-house manufacturing. So how has this approach contributed to your innovation and product design? Because that's what you've been talking a lot. I mean, a lot of focus is on innovation and R&D.
We have so many different people from diverse cultures who help us to do this kind of vertical integration, backward integration, being able to do things ourselves. See, ours is a relatively low volume, but still compared to automobiles and all where they talk in millions, we do not talk. Therefore, it becomes important that we have a back-to-back facility where we are able to make the components. And, although instruments are instruments, the heart of the instrument is the same, but you have to package it in a way which is adaptable to the local countries. And that is possible only when you have backward integration, and you can do your molding, you can do your punching, you can do what you need to do and still cater to the local market. Similarly, the standards are different. In Europe, you will always have the EN standards, European norms, they call it, or DIN standards, whereas in US you will always have ANSI standards, in Japan you will always have GIST standards. So we have learnt all these one by one, but when we have facilities in-house, the response time really goes down, and today the name of the game is fast response, nothing.
When you say fast response, obviously I have to ask you if you can share with us, our viewers, a recent product or something to do with your R&D breakthrough which you would want to tell us, and it exemplifies your strategy of vertical integration as well as sustainable innovation.
The world is very conscious about green energy, so we are into solar inverters. Solar inverter is a device which takes the DC voltage generated by the panels and then converts it into AC voltage which can be fed into the grid. Now we are into many new products which will, for example, power quality is a really recent addition where for early years the availability of power was a problem. Today I think even the villages in India, most of them have power. Power quality has become a big word, and our R&D facility makes sure that the power quality remains within the prescribed limits set by the authorities who are approving either the product or the service, and therefore it gives us the flexibility to be able to meet the standards set by the people.
What role does India play base in your future growth plans, and also when it comes to your global operations, specifically because I'm asking you about manufacturing here in Nashik?
So even today the basic R&D distribution of the work happens from India. The maximum number of R&D people are in India. The maximum number of instruments made per year are in India. The electronics division is the largest in the world, is in India.
Okay.
But aluminium, we have about 400 people working for us in the aluminium die casting in Poland.
Okay.
And that facility we never set up in India. But electronics for sure, the new technologies, new microcontrollers, new developments which happen, they happen in Nashik in India, and then of course they are distributed all over the world.
You've invested in green energy R&D. I think you've done it in IIT Jodhpur as well as Nashik, and also conservation. Mr. Golia, how are these initiatives shaping both the brand as well as the bottom line?
You have to be in line with what the world is talking about. Sustainability today is the biggest, let's say, challenge for and as well as the opportunity for people. Having said that, a lot of research is being done in green energy, in renewable energy, and at IIT Jodhpur we have built a center which is called the Rishabh Center for Innovation in Renewable Energy, in Green Energy. So that is, you can imagine, there are more than 14 full-time professors, and then there are PhD students working on new forms of green energy. Same way we are working at IIT Bombay. I'm an ex-student of IIT Bombay, so we obviously have a special attachment to IIT
Absolutely,
Bombay.
where you've grown up, learned. Yeah.
And therefore there we are making sustainable housing. It's called the HEARTS project, HEARTS. But the whole point is that you use more and more materials in housing which are either renewable or which can be sustainable in the future. So we have really made houses for the villages. Prototypes are ready. Now we are going to roll it out in a bulk format. And it is done by the class of 75, we call it. All the students who passed out in 75, they have contributed to this. So from that point of view, a lot of work is being done by many organizations, not only Rishabh, but Rishabh is also playing a very big role in making sure that all that we do is sustainable.
And giving back and working, I think, for the environment.
Sure.
How are you ensuring, or how are you cultivating leadership, technical excellence at every level? Do you also see that a challenge with the present generation?
We have curated a program where we take young people who pass out of college. We give them 3 years of training in different skills, in sales, in marketing, in manufacturing, in technology, in quality, wherever they're
So in all your verticals, in fact.
All your verticals. We have a program here called mentoring, where the senior people will mentor the junior engineers, and one-to-one they will spend a couple of hours every week to make sure that they imbibe some of the skills. We send them to colleges like IIM or other places where they go and learn. The same way we have programs in Poznan, Poznan University, Zelenagora University. We send engineers from India to Poland, and 2 years they do a master's management course. Within the company we have got pairing up done, where seniors pair up with the juniors, and I'm so happy to see some of the people come. One of them has come with a chartered flight from US.
Okay.
So
that kind of regard.
That kind of regard there, but he came back to wish us, and of course he's become a big man in the USA, working for some international corporation.
Lastly, of course, I have to ask you this, looking ahead, where do you see Rishabh Instruments in the next 5 to 10 years, and specifically in terms of technology, in terms of sustainability, in terms of innovation?
The way we have developed technology, way we have developed people, way we have developed markets, the way we have got people all over, I don't think the future can be very different. Of course, the products will be more complex, technologies will develop further, power quality will take a very big leap forward. We know that both on the product side, on the people side, on the application engineering side, today application engineering plays a big role. Solar inverters is going to be a very big thing for the future, and it's recyclable. Sun again, next year again you have the sun, next year again you have the sun. So from that point of view, I think it is very good that we are working on that. Power quality, see, whether you work with green energy or you work with black energy, which is the carbon energy, nevertheless you need to measure, you need to control, you need to transmit from one place to another. So that is our core strength, that is our forte. We have developed very good measurement techniques, and we are leaders in technology. We are working with IIT Bombay. We have one research center within the IIT campus, IIT Bombay campus, and there we work with professors. We also try to motivate them to come out of their research mindset and also work with the industry. It is doing well. IIT Jodhpur, I talked to you. So we are really making sure that we give back to society what we got from society, to see that the professors come out and really take India to a leading position in the world.
Well, it's really been a pleasure to have you with us on NDTV Profit. Thank you so much, Mr. Bolia, for joining us.
Sure. Thank you so much.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
If you're an investor looking to explore immigration programs and options of citizenship and residency across the world, then the IREX Residency and Citizenship Conclave 2025 was where you needed to be. Held at the Trident Hotel in Hyderabad earlier this month, the 22nd edition of this prestigious event opened the doors to investment and lifestyle opportunities across more than 15 countries. The conclave included a conversation that decoded global investment trends and the rise of cross-border wealth mobility.
Hello and welcome everyone. We are at IREX 2025 Hyderabad, India's leading international real estate and immigration show. It's a pleasure to be with all you experienced people on the panel. Thank you all so much for joining us. Let me quickly introduce you. We have with us Mr. Girish Mohile, Vice President, India CMB Regional Centers. Also, we have Edwin John, Director, Business Development, US Immigration Fund. Joining us today is Abhishek Singh, India GCC Singapore, USA EB5 United. Riya Nandi, Director, Investor Relations, India EB5 Capital. Also joining us today, Rishabh Gandhi, Regional Director, India and the Middle East, Civitas Capital. Joining us today as well, we have Arushi Gupta, Managing Director, India Donoso and Partners LLC. And we have with us Mr. Rohit Turkund, member CSG Law. It's really a pleasure to have you with us. Thank you so much for joining us today. I think to begin with, Girish, something which we all want to know, our viewers want to know, the audience wants to know, why should an Indian opt for an EB5 visa program over the US immigration program to gain USA, residency permanently?
Thank you, Ambika. And this is a very important question from a perspective to understand what EB5 visa firstly is. So EB5 visa is an investment-based visa which allows investors to invest in a qualifying business in order for them to get permanent residency in the US, which is called as a green card. So who is included in one single application. It's the main applicant, spouse, and unmarried children below 21 years of age. Now, what is that qualified investment? An investment needs to go into a qualified business. So it can either be an investment with a regional center or your own business. Mostly people use regional center as their go-to route for achieving their green card via EB5 visa. So you need to invest in a qualifying business. So a regional center's job basically is to seek those investment opportunities which will qualify its investors for EB5 program. Now, what is the investment criteria? The minimum investment is $800,000 if it falls under a certain category, and $1,050,000 if it falls under another category. So EB5 visa is the fastest route to achieve that permanent residency via investment. Now, this is not a traditional investment where you are looking for a return on your investment. Rather, the main purpose of EB5 visa is to seek that permanent residency and the return of your investment. So if you're investing $800,000 down the line, once the jobs are created, the construction is complete, you should be able to recoup that capital back.
Sriya, I want to ask you here, since we have so many of you from the regional centers, can you elaborate the role a regional center plays when it comes to your EB5 process? What are the key factors that an investor should keep in mind, personally while selecting a project, and also identifying a credible and experienced regional center, because sometimes investors are confused, which place is the right place for them.
So let's divide this into two. Firstly, what is a regional center? It's essentially a license that a lot of companies hold in the US, and what this license basically does is allows these companies to raise funds in the US in a job creating entity. How does this help investors? So investors work with regional centers who are collaborating with these developers and help them in raising funds in their projects. So in turn, what happens for investors are they invest these funds in these job creating entities, see that their jobs are being created, and against that they get their green cards. What does a regional center do now in all of this? We firstly collaborate with developers, see what kind of projects they are doing, and we say that we're going to help them raise funds in their projects. We are also going to work for investors as a fund manager, wherein we will see that their funds are being invested in the right project, see that all investors, 10 American jobs are being created, because against that you get your green cards. So that is essentially what a regional center does.
Well, thanks, Riya, for that. Edwin, this is where I think you would come in, since Riya's explained the role a regional center plays. Tell us about the types of real estate or infrastructure projects most commonly supported by EB5 capital today.
When you look at EB5 as a category, there are three subcategories to it, right? So you have your high unemployment area, you have your rural, and your infrastructure projects. At USIF, at least I can really vouch about the fact that we are comfortable with working on multifamily mixed-use projects, because we see that there is enough and more demand irrespective of whichever location the project is coming up with. And I'm sure that my industry colleagues also would support me in that each regional center has some or the other expertise in any of the types that they are working in. So having said that, right from the beginning, for the last 15 years, we've done 25 plus projects. We've done projects in all the three subcategories. We have raised projects, capital for projects in a hotel project, a mixed use project, retail, name it, and we've done that, right? So these are a couple of subtypes that we need to focus on. And yes, for us at least, mixed-use multifamily projects continue to remain our go-to when it comes to raising capital from an EB5 standpoint.
Rishabh, how do regional centers safeguard the investment of the investor, or what is the guarantee of repayment of investment?
Firstly, we personally don't like to use the word guarantee in EB5 because, USCIS wants your money to be at risk. As part of our process, as part of your regional center, what we do is we try to minimize that risk, right? So you can divide the risk into two categories. One would be your immigration risk, which is the risk of not getting a green card. And then there can be a financial risk, which is not getting your money back, right? So what we do is we have covenants set in place. So when we are looking at projects, like Edwin just mentioned, multifamily, hospitality, we are very comfortable doing all of that. But what we look at is the ability of the borrower to repay it, to refinance, to service the interest to us on time. And when we look at, all of our projects, we look at a very clear exit strategy, right? For example, if a project says, 6 years down the line, I'm gonna, sell my asset at an X amount of value, we just look at the market trends for the last 20, 30 years and see, whether that value would be achievable or not.
Arushi, again, when we're talking about, like we say, EB5 is the quickest way or the fastest way, right, to actually reach America or, get to your dreams. What key strategies can investors, use to ensure that their source of funds documentation is clear? And also, how could they avoid the USCIS delays? Because timeline is something which I think people would really want to know about, our audience here.
What can we do at our end to minimize the risks involved in the transaction? And this is where your lawyers come into the picture. Your regional center and the law firm are two pillars of this entire transaction. While one is dealing with investment advisory, the other pillar is looking at the compliance end-to-end to ensure that you receive your conditional green card, your permanent green card, in the right timeline. So at Donoso and Partners, we are based out of Maryland, and over the years, over a decade, we filed over 5,200 EB5 petitions, and consistently what we aim to achieve is to have the most easiest source of funds strategy carved out for our client much ahead of time. On an average, we try and ensure that we complete the source of funds verification, which is basically tracing how did you earn the money and then how are you transferring the money.
Well, thanks, Arushi. Now that we know that the source of fund is important petition, that's where, I come to you, Rohit. I want to know, now that we know about the source of funds taking the step further, how can an investor, really verify that their capital is being used in accordance to the business plan which they had actually submitted to USCIS?
There's a simple principle that I like to tell the individuals. It's your money, it's your green card, it's your investment, it's your risk. Everything is about you guys. The regional center and the attorney are only vehicles to get you to your destination. You owe it to yourselves to do the due diligence. Especially if you're in the US or you have the ability to go to the US and you're visiting a regional center, whether it's Rishabh's or Edwin's or Abhishek's, anybody's, go meet them, go look at the place. Does that actual construction exist? If they're saying they're building something, have they broken ground? What are you seeing over there? Sometimes the regional centers and the job creating entities may be related, and that can create some problems. It has in the past, at least. But now with a fund administrator, that should be reduced. There is no guarantee. The word guarantee does not exist in EB5. But you can minimize the risk of losing your money and also minimize the risk of not getting your green card, although you may not be able to eliminate it completely.
Arushi, this is where I want you to tell us that what laws do the investor need to comply with at this point?
Sure. So whenever we are looking at an EB5 application, we are looking at laws in two countries. First, in United States, because you're dealing with United States citizenship and immigration services. So you look at the local US laws. And secondly, you look at the laws in your country of residence. So if you are an applicant from Hyderabad, India, you're looking at the laws, local laws applicable here.
Is there a risk of higher scrutiny or any changes you feel which could happen to the investor eligibility?
I think with the Reform and Integrity Act, they've laid down a pretty solid foundation. It's got a clause for grandfathering. So even if any changes happen, anybody who's filing while this law is in practice, they will be grandfathered under the old law. So luckily, if the program changes and we keep hearing about it over tweets by the President of the United States, but luckily he does not have the powers to kind of change this without a congressional approval, right? So he has to pass this as a new law, and it will still only be applicable after the sunset of the current Reform and Integrity Act, which is in 2026.
Okay, so nothing as of now?
Nothing as of now, yeah.
Okay, thank you. Abhishek, when we look at college, families with college-bound students or children, which pathway ensures the fastest and the most secure transition to permanent residency? Like Rohit had also mentioned, if your children need to go to college, or that could be the right time. So what do you suggest?
One thing I would like to emphasize on the fact that when your children are above 18 years of age, when they are doing when they are in the college, that should be you should be while choosing a project, and you should be very aware of the fact that EB5, right now EB5 is current for India because of certain categories open. The TEA is further segregated into, as Rohit explained, rural category, urban category, and high employment area or urban or infrastructure categories, which has visa set aside. So in spite of having India backlog, you are skipping that particular backlog and visas are made available to you. But like, every other queue where Indians are involved, this particular queue is ever forming. It's getting longer and longer. And there will be a time when there will be a priority date on each of these categories or some of these categories. So you will have to assess with your immigration lawyer whether with the age of your child, who should be the main applicant.
Yeah.
That is the most important thing, because you are trying to, if you're trying to cover all your children, if they are not in the US and you are not filing for concurrent filing, then it becomes a issue if there's a retrogression in picture after some time and there's a priority date which may, one of the child or anyone can be aged out. So that is something that should be kept in mind.
From luxury homes in Dubai to US citizenship through investment. The global opportunities for international real estate and immigration by investment are expanding. We'll be back after the break with more insights.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. The recently concluded Hyderabad edition of the IREX Residency and Citizenship Conclave saw the participation of 20 plus leading real estate developers and immigration by investment companies from around the world. Reflecting on the evolving mindset of Indian investors, we now feature an exclusive fireside chat with Mr. Girish Mohile on what truly defines a smart global investment.
Welcome back. You're watching IREX 2025, and we have this interesting fireside with Mr. Girish Mohile, Vice President, India CMB Regional Centers. I would like to tell our viewers that CMB Regional Center is one of the oldest regional centers in the US. Thanks, Girish, for speaking with us on NDTV. To begin with, if you can tell us, what is CMB Regional Center's main business?
Thank you so much, Ambika. So CMB Regional Center's main business is to act as a fiduciary on behalf of its investors. We specialize in EB5 visa. It's an investment-based visa which allows investors to invest in a qualifying business, which will allow them to get a green card or a permanent residency for the US. It includes the main applicant, spouse, and unmarried children below 21. So what CMB really does is we source projects, we work with different developers, and we analyze the projects, whether the investment which goes into those projects will qualify those investors for EB5 or not. And then we allow them or open them up for investment to our prospective investors. The minimum investment amount for EB5 visa is $800,000. That's what we function in. So we mostly have projects which are in a targeted employment area, which allows the investment amount to be reduced to $800,000. You can probably start your own business, but you need to take care of the job creation yourself. You need to invest the money into a qualifying business with an investment amount of $1,050,000. So what we do really is to simplify the EB5 process. We differentiate the goals of each of our investors, where the primary goal is to secure the green card and the repayment of the investment that they do.
It can be pretty confusing, for an investor or an individual who's first trying to figure out, what they want to do, when they want to go. So are all the EB5 regional centers the same, or does the choice of actually choosing the correct regional center actually make a difference?
The answer is yes and no. It's a bit nuanced. The reason being, regional center is a designation. So any entity who qualifies as a regional center can essentially operate in this space. What differentiates every regional center is the way they function in the market. If I have a regional center designation, but I don't really actively work in this environment, but I do have that designation. So a developer comes to me and says that, hey, you know what, I have this project, I want to raise EB5 capital, and you have this designation. I don't have time to apply for my own, so would you rent this designation to me? And there are regional centers who essentially take no due diligence efforts from their end, but they just rent out their regional center designation to others. The second point, and the most important point, is to analyze the history of that regional center, because that's the simplest way where you will be able to understand how that regional center functions and in what manner they have those set standards to conduct due diligence on the projects that they have onboarded, and what asset classes they have worked with in the past, which developers they have worked with in the past. And that is how you will be able to zero in on a specific regional center and a project.
Okay, so now lastly, I'm going to quickly ask you, three most important points when it comes for an investor to keep in mind before they go in for the EB5 visa.
The first point is to finalize whether you want to go forward with EB5, whether your dream is to live permanently in the US or not. Secondly, whether the project that I'm investing in, whether I'm rushing into it, someone is just marketing it, oh, this project is going to be over in 2 or 3 days, and you need to take a call right now. Not the right way, in my opinion, because at the end, you're putting your hard-earned $800,000 into that project with that regional center, trusting them with your hard-earned money. So I would not rush into anything. I would conduct due diligence. I would ask as many questions as possible. There are many regional centers who are going to have a subsequent project out there in the market. So I would not rush. And third and most important is to analyze what exactly you're looking for in terms of timelines. Now, as we discussed in the previous panel as well, that there are projects which are in high unemployment area with a better or greater track record. There are rural projects where we are yet to see the track record in terms of repayment of capital, but there are certain situations where you would want to take that additional element of risk because the project makes sense. So every case, it's not one size fits all. You need to take that call on your own. An informed decision needs to be taken by the investor themselves, and do not get forced into any kind of timelines or investments.
I think really well explained. While the EB5 visa could be the fastest way to someone, for their dream, if they want to be in the US, and the law firm, obviously, and the regional centers play a critical role. But I think equally important is that the investor himself, like you rightly said, does due diligence and needs to know whether it's, why he wants to go and has all his answers in place before.
Yeah. Due diligence is the word of the day.
Yes. Thank you so much, Girish. It's really been a pleasure to have you with us on NDTV.
Thank you so much.
Indian market has always been a very good market. Indians are progressive people, and as you know that in the US we have a big Indian diaspora, and there are a lot of people from India who go to US for studying, and they would like to, after studying in the US, they would like to work over there and look for a guaranteed and a stable future. So India has been a good market always, and I believe that it will remain to be a very good market.
India market is also doing quite well, especially students and H1B folks who are already in the US are opting for EB5 visa. So we are speaking with parents, main applicants over here as well, and there is certainly a more demand when it comes to EB5 visa currently in India.
We at IREX are here to promote and educate investors about the EB5 program. As Indians, we always want to look at various options before we finalize on a particular investment opportunity. And keeping that in mind, we brought all of these programs and projects to the Indian community.
We have different projects that an investor can look at, projects based out of a rural area, projects based out of an urban area. Depending on what they require, we have different kind of projects offered to them. So I've been coming for IREX for over 5 years now, and we've been to multiple cities where IREX is hosting events, and it's been great because I get to meet so many prospect investors, agents who would like to help investors move with their EB5 prospect. So it really helps connecting with a lot of people who are interested in EB5.
We assist individuals, in their journey of the US green card. So we basically help, structure projects, and these projects qualify as per the USCIS regulations for the EB5 investor program, which is the shortest and the surest way of getting a green card. What I really like about our offerings is, we understand that, these Indian families are very, very conservative, and, they want this capital back. So we try to mitigate this risk by doing a lot of multifamily senior lending projects. Even on the hospitality side, they're always looking to be the senior lender because we have the first charge on the asset, and that allows us to kind of, mitigate the risk. The risk is there, but we try to reduce it as much as possible.
So if you look at the Indian market in specific, a lot of Indians are looking to get their residency option. They're not willing to let go of the Indian passport, but they're looking for options where they can have ease of business. Dubai is probably a place which helps people set up their own businesses. It's a tax-free environment. So we are providing a platform where people can invest in our projects where they can get guaranteed returns.
Well, if you see in Dubai, almost the entire Dubai population, 38% is owned by Indians. So we know that Indian market is dominating, and not just in Dubai, but globally. So we know that it's the right people, doing the right investment, which is Dubai. I am so amazed because globally recognized companies are over here, and I am experiencing and exploring every aspect of it, which is so great and good inputs for all the people who are over here. Even I learned a lot so much over here.
As international real estate and citizenship by investment options grow more accessible, Indian investors are shaping a new global narrative. From diversification to lifestyle, the IREX Residency and Citizenship Conclave 2025 was a gateway to possibilities. Until next time, keep exploring, keep investing.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
In 1937, the Notandas story began by crafting fine jewelry, shaping a legacy of elegance and luxury. In episode 1 of Dreamers, Builders, Disruptors, we saw Vandana Jagwani carry this forward with bold, unique designs. Harsh Jagwani, however, chose a different path, entering the challenging world of luxury real estate. Under his leadership, Notandas Realty transforms Mumbai's skyline with projects like the 96 Tagore, delivered ahead of schedule and known for its innovative design and quality. Welcome to episode 2 of NDTV Profit, where we get a closer look at Harsh's journey.
Hi there, I'm Sanjana and you are watching Dreamers, Builders, Disruptors on NDTV Profit.
Today we have a special guest in our studio. He is a true maverick who has carved his place in the fiercely competitive world of real estate. Coming from a family legacy steeped in elegant jewelry since 1937, he made this very bold transition into luxury real estate, crafting bespoke residences and iconic landmarks. So without further delay, let's welcome Mr. Harsh Jagwani and uncover the story behind the spaces that are shaping Mumbai's skyline. Thank you so much, Harsh, for joining us, and welcome to NDTV Profit. I'm going to ask the question, rather address the elephant in the room. Stepping into luxury real estate was obviously a very bold departure from your family's storied jewelry legacy, right? So what inspired you to take this leap, and what personal motivations drove you to choose such a different path?
So basically, I've been born and brought up in Bombay, right?
Yeah.
Bombay being a market, every person probably living in Bombay has some kind of investment or something to do with real estate.
Sure.
Maybe their house or their office, somebody does something like that.
Yeah.
When we were growing up, we did invest a lot with developers, saw the entire industry. Lost some money, made some money, but that's how I think most people in the city work.
Sure.
Then we started building buildings as my father started building, My father started building a few buildings one at a time. Just as an investment kind of strategy. We would build a building, retain most of the commercial inventory within it, and then sell a few apartments or a few of the offices and move on.
Sure.
We took it full-fledgedly when I came back from college, and he had more hands. So my sister looked after the jewelry and I started looking after the real estate bit. That's when we went completely into the development kind of a mode.
Got it.
And the luxury part of it, we were always into the luxury space as such, because we do, jewelry's been there since maybe 80 or 80 years maybe now.
Yeah.
And we only do luxury jewelry as such. So this was not that much of a thought process difference, I think, compared to what we were already doing.
Correct. So, as a representative of the Notandas legacy, how did you navigate the personal challenges of carving your own path into an entirely new industry? You are telling me that, of course, there was some background, there was just some understanding that your father had kind of broken it in a little, but I think what you did was just come in and take the reins completely. Were there any moments of uncertainty that you had to overcome?
No, of course, quite a few. Yeah. So I call it lucky and unlucky at the same time. So we were very lucky that I got a full free hand to do whatever I wanted to do.
Yeah.
When I came in, probably we had one employee in real estate just handling older assets.
Yeah.
Nothing in development per se, old assets held, just the management of those assets. And then today we are about 95 people strong in over 3 years now, I think 3.5 years. So at least I got the opportunity. I had the basic understanding.
Sure.
This is your consultant, this is an architect, this is a licensing architect, this is a structural consultant, but I had a complete free hand how I wanted to move. So we made some mistakes. I also found good mentors in the due course to at least help me out, and a lot of questions were answered. Very, very helpful people I met across the timeline.
Lovely. And I think making mistakes is a big part of succeeding in any business, as long as you don't look at those mistakes as failures, right?
No, of course. So you cannot look at it as a failure.
Yeah.
If you go on, it's not failure anymore. It's just a mistake and you move on.
Absolutely. Absolutely. So, we spoke earlier to your father and asked him how he reacted when he first got to know about your plans to strike out, okay? And how he sees your vision carrying forward the Notandas legacy of craftsmanship and luxury. So let's hear what he had to say.
So as Harsh, as soon as he came after his education, finishing from UK, and in fact, even I was also waiting for somebody to join, and then when he came and expressed his ideas, and of course, then in fact, rather than I took his support, and we both got quite aggressive with his ideas to expand the work, and touch wood, in a couple of years we've been really achieved the kind of in real estate a very good level of work what should be more than the expectation. He's proved himself also to be on the ground.
So proud?
It's like it's a proud moment. Both the kids touch wood have been quite very successful the way they have thought. In fact, as I told you, that's why the reason today I don't tell them no for anything. Whatever ideas they come up, they're open to, and they are doing a good job for the brand.
That's endearing.
He seems a lot more enthusiastic now than a few years ago, but yeah.
No, No, but tell me a little more about that. Was he not as enthusiastic a few years ago?
I mean, we came back also young, and he's of course enthusiastic about business in general.
Correct.
But again, to again restart an entire journey, and then you want to be a part of it. It's a lot of real estate also very capital intensive as a business. Any bet we take is a very large bet as such. So of course you have that. I wouldn't say nervous. You don't have nerves, but hesitant, of course. But of course, once one does well, second does well, you start building confidence. So now sometimes I pull him back. Yeah.
But let me scratch the surface further. What's it like working with and for your dad? Did you always know and think that would be, the path that you would carve out for yourself?
So it's really funny. When I started in real estate, we had maybe one project, so it was very, very hands-off.
Right.
It's like, you do yours, doesn't matter on the entire ecosystem, does well, doesn't do well, you figure it out your own manner.
Correct.
Then the second came, third came, fourth came, eighth came. Now it's probably a very large part of the entire ecosystem of Notandas, the group in terms of that sense. So now he's, of course, more hands-on compared to he was 3 years ago, which is usually very rare. Usually it is that, there's a father and a son, and then the son joins, and then slowly the father starts moving out. Here he's been moving in year on year because there's so much more happening in terms of action.
That's actually quite nice and very interesting, even for a father-son dynamic, right? In and out of business. Okay, so Notandas Realty is known for bespoke residences and iconic commercial landmarks. How are you infusing the same creativity and really the uncompromising luxury, right? The brand is known for that, from jewelers and, the vandals into your real estate projects.
So I think a few qualities which most developers have and we don't. It's not a good or bad thing. It's just generally...
It's okay. Just an observation.
Just an observation. I think attention to detail. We're not doing massive projects, which is 2 million square foot, 3 million square foot, commoditizing real estate in general. Of course, everyone makes money and everyone's business model is different. So we like to do boutique developments, maybe about 2 lakh square foot, 3 lakh square foot, 4 lakh square foot, where quality can be controlled. We actually go out and put attention to detail in every corner, every clubhouse, every toilet, every corner as such. So it is very hard to do it at a larger scale. We'd rather do it in multiple projects where there's a project lead and they do it in that sense. But doing 3 million square foot with attention to detail is not impossible for us also. It's not even possible for us, sorry. So that's where we kind of think there's a differentiating factor.
Right.
Also,
just like designing jewelry.
Exactly.
Okay.
Just like designing jewelry. And then the second aspect is that I personally, it's a good or bad habit. We don't look at costing at all. We do look at costing, but everything always runs over cost. Because if we like something, we travel, we're in Dubai or Singapore.
Correct.
We like some kind of facade, we like some furniture, we click pictures, send it back to Bombay.
Yeah.
We like, source this is something new we've seen. So very passionate about it in general.
Right,
I think so.
Right, absolutely. And I think it's only when you really push the boundaries and take those kind of risks that you're then able to really see that vision convert into reality, right? Okay, so, talking of vandals, we also spoke with your sister Vandana about, your shared passion for creativity and shaping the future of the Notandas legacy. So let's listen to what she had to say as well.
So one of the most beautiful things is that we all have a very similar vision and goal in life. First though is we want to do good, then we want to scale, and before that we want to respect everything that is given to us. That was our upbringing. We have all different styles. That's a blessing, because then we fill each other's gaps. We don't all think the same. If all thought the same, that would just not be nice. Then wrong to wrong sab, right to right sab. So all four being completely different in their styles and approaches, but always having a common feeling is our one good thing in life.
Do you give each other advice, business advice?
Yeah, of course we do. I call it productive friction. Because that's when I think true creativity comes out. We have such different thought processes in general.
Yeah.
We try to find a midway. We don't fight like crazy that no work happens.
Correct.
Everyone has their own control of various things that they do.
Yeah.
But of course, we do fight tooth and nail that you should understand my point, get what I'm saying, then take your calculated decision.
Correct. Just like probably what you would have done when you were children as well, right? And I think there's a certain amount of trust that you also have when there are siblings also involved in that equation, business or otherwise,
No,
right?
of course, definitely.
Yeah. Okay. So what specific challenges did you face in building credibility? Because, you have a jewelry legacy and trust in the real estate industry coming from a family that's well known for jewelry craftsmanship. Did you face any kind of pushback or any kind of challenges?
So I'll tell you honestly, when I joined, I had no trust in terms of no trust deficient in terms of a brand name. Everyone trusts the jeweler.
Correct.
Nobody trusts the developer. So that was kind of lucky for me specifically, that because the jewelry legacy was so old, clients and vendors and everyone really supported me in that sense. But the flip side was again age. When most people come to buy apartments, or if I sat down with landowners, they're probably 55, 57. You want to offer them a large number for their land or for a joint venture. And they're like, who's this kid sitting in front of me? Where is his father? Call him and this thing. And I told you in the initial years, my father was also very, very hands-off.
Correct.
Right? Even now, is quite a certain extent.
Yeah.
So I would go one round meeting, second round meeting, third, and they're like, where's his father? Why isn't he coming? There have been a couple of transactions only come on the last day for a handshake.
Yeah.
Right? So then like, okay, now you get a face to the name. This is what is happening. So I think the major challenge was there in terms of age. I think now since we've got older, I think that pretty much, I'm still young for the industry standard, I believe so. But I think over time, that's how personal credibility got built over a few projects.
Correct. And how do you think that you overcame that earlier, like that aspect of being taken seriously? Because I think that's across the board and we're seeing so many young entrepreneurs today. So I'm curious to understand if you had like advice to give, say, other young entrepreneurs who are struggling to be taken seriously or feeling intimidated in, rooms where there are very, very senior people, what would you say to them?
I think if you know your stuff, just go ahead and continue doing what you're doing. If somebody doesn't appreciate it, maybe you don't want to do business with them as well.
Yeah, I think that's good advice. Yeah, for life as well, right?
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular.
At one of your standout realty projects, how did you channel your vision for architectural mastery to create something that's truly iconic, and what would you say was the defining moment in this entire journey?
So I wouldn't point out one particular project, but generally when we're developing a project on day one, when we're on a blank slate, every project since it's luxury, I would never build anything I couldn't move into. We relate to a lot to our clients. So now, of course, it keeps evolving. Our own tastes keep evolving. I would not build anything I couldn't move into in terms of luxury or spatial design or just planning in general. That's one major aspect I look at. Also, we go out and see what people are calling luxury in that market. And we, of course, want to push the envelope from there. So that is whatever we are planning is maybe on a bare minimum 20% more, I wouldn't say superior, but we tried our best to put more things into it so our clients are more happy and they're actually proud of the development they move into in the future.
Right. That's a good approach to have, I think. And that's not just, in your business. I think in most businesses, you really need to consider and put yourself in the shoes of the audience and the consumer. What would you say is your vision for Notandas Realty in the next decade? Are there plans to push the boundaries of real estate luxury and perhaps in other Indian regions or even global expansion?
Yeah, I think so. A decade is too far, honestly.
Good. I like this tenacity.
So that a decade is too far, but definitely the way the income brackets in India are changing and then the global exposure Indian clients have now, so many of our clients are just the general population. I really think luxury is here to stay for a very, very long time in India, and just the general preference what people could sell as luxury in the past is not going to pass off.
Correct.
People are exposed to global landmarks, they go live in Dubai, look at the buildings there, they go live in Singapore, London, things like that, and we don't even, and honestly, even though we build here, we don't even have 25% of that kind of organization or quality or structure here today, I think so.
Correct.
So it's a long way for us to go, as such.
But you'll get there.
Definitely.
Okay, so I'm going to switch the gears now for a realty vision round. So maybe a swift, precise, rapid-fire answers to highlight the strategy behind Notandas Realty. Okay, so I wish there was a hamper at the end of this.
Yeah,
Okay, one word to encapsulate Notandas Realty's mission.
It would be pushing the envelope. It's not a word, but I was just trying to...
A phrase. Okay, we'll let that pass. Design, location or sustainability, the cornerstone of a luxury project.
Location. I would say developer, but location on your options.
Your go-to strategy for overcoming a market challenge.
Just keep doing what you're doing. Persistence.
Nice. Name a global city apart from Mumbai you would want to build a project in and why?
I think Dubai now, just their policies and the creativity they have, I think it would be fun competing in that market.
Yeah, sure. The most valuable lesson you learned after starting Notandas Realty?
It would be challenges keep coming, keep moving on. Although you have everything, still you have challenges on a daily basis.
Nice. Partnership or innovation, what fuels real estate success?
I think partnerships.
Partnerships.
Partnerships, definitely.
One trend poised to redefine luxury real estate.
Again, I'm repeating, I think quality.
Okay. Okay, lovely. Thank you so much for your time. And I think you did really, really well.
Yeah, for the first time.
Yeah, fabulous. So well done. You're a veteran now, essentially. From jewelry to real estate, Harsh Jagwani and the Notandas family show us how creativity and uncompromising luxury create timeless legacies. From Mahesh's craftsmanship to Vandana's bold designs and Harsh's architectural mastery, the Notandas story is one of fearless innovation. Thank you, Harsh, for sharing your journey, and stay tuned for more stories of legacy and vision.
Today, we explored Harsh Jagwani's vision reshaping Mumbai's skyline with Notandas Realty's innovative projects. But the Notandas name has stood for fine jewelry, a legacy of elegance and luxury for more than 80 years. In episode 3 of Dreamers, Builders, Disruptors, we meet the OG, Mahesh Jagwani, who has kept this legacy alive. His bold leadership transformed Mahesh Notandas into a beacon of craftsmanship, inspiring a new generation. Join us on NDTV Profit to uncover Mahesh's journey and the heart of the Mahesh Notandas story that continues to create luxury.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको?
Kenneth, I would love to know if you reckon that the markets, the cycle that we may be in, because I know you study business cycles, you study market cycles. Are we at a point of time in the cycle wherein the chances of the cycle continuing positively are higher, or is it the other way around?
Okay, firstly, business cycles, and I hope market cycles follow the business cycles. Okay, so from a business cycle point of view, we've been at this place for a while. Okay, it's the best you've ever seen, and hopefully the best you'll ever see for some time, right? And I've been on multiple forums, including having conversations with you on where we are from a financial standpoint. Okay, corporate India is at its best ever, etc., etc. And I don't know if it can get better from here. Okay, but one thing they refuse to do is reinvest back into the cycle. Okay, and that's becoming a genuine problem right now. It started showing up. It started showing up for the last 2 years. Even 2025 over 2024, you had a single-digit growth. 2024 over 2023, you had a single-digit growth, and this year doesn't look any significantly different. Of course, you have a couple of companies here and there that can pull a rabbit out of its hat once in a while, but I think unless you get back to a capex cycle, more so a private capex cycle, followed by whatever the government's doing, we're stuck in that point wherein single-digit growth and very high valuations for the kind of growth you drive.
Okay, and so Kenneth, it is very difficult to maybe hypothesize what will it take for corporate India to start investing, right? So does an investor wait for that turn to happen at some point of time to take advantage of a full-blown capex cycle, or does the investor move his vision elsewhere?
So let's look at it from an investor perspective, right? I don't think you're going to get significant out of the fixed income market. Okay, it's very tight in terms of where yields are right now, and I'm not too sure that we're prepped for another rate cut given where the global macros are, right? That's one. Second, if you go back to equities, and if you look at equity valuations in a very different perspective, if you're at 22 times earnings, or even 23 times earnings, 23 times earnings, you're at about 4.5 times cash flow yield, earnings yield. And if you look at earnings and all of that is becoming cash flow, you're at 4.5%, which is equal to where your bond market would be. Okay, and you hit parity out there. So between equity and fixed income, I don't think there's too much of a choice out there, which is where you've got alternative assets doing reasonably well. So I think that's what the choice is left with an investor. So there's no risk on capital from here. I don't think there's a risk on capital from here, but you've got to lower your expectation on returns. Okay. If I look at a 5-year compounded or a 3-year compounded or a 2-year compounded, that's as best as you're going to get for a while. Okay, I don't think it's going to cross that in a hurry so far. And you hopefully consolidate around this period of time. Okay, because if your broader economic parameters or broader growth rates are going to be single digit, to expect a company or two to become growing significantly faster than that, I think that is behind us for a while. Okay, so that's what an investor should do, and that's what an investor should look at. Wait for a period of time, see how it works out. Now, the capex cycle is also a little bit of a it will come. In what shape and format, I don't know, it will come. And when capex actually comes up, it's usually followed by first free cash actually getting absorbed by the capex. Plus then you leverage up your balance sheet also, right? So there's a new element of it all, which is debt coming in. And when you have a cycle like that expand itself, valuations tend to tear downwards. So your 23 times have to go to 20 times and 18 times and 19 times because there's a new participant in that EBITDA, which is interest cost, which is where the debt picks up. So I think we're stuck in that right now. Right now, no capex, elevated valuations. If capex comes back, you will get growth, but you'll still have valuations that would erode a little bit. So you're stuck for a while in this zone, and you'll have to go, and you'll really have to go stock picking to find an opportunity out there. Okay.
Got it.
So the market, my sense, has to get very narrow. And extremely narrow before we can see any signs of a full-blown revival all over.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. 1 of them went ahead and built this ecosystem. And yes, we had a parting of ways.
Welcome to this very special episode of The Disruptors. And today we're talking to a man and a product that has become a huge part of all of our lives, especially if you're an air traveler. Now, when Digiatra was first launched as a concept, there were more questions than answers. People wondered whether their data would be safe. People wondered why the government wanted face biometrics, what it would mean. But over the years, it's become very clear that if you're not on Digiatra, you must be prepared to spend a lot of additional time going in and out of large airports. As this product and its use spreads over Indian air travelers, we have the pleasure to speak with the CEO of Digiatra, Mr. Suresh Khadakbhavi is with us today in our studios. Thank you so much, Mr. Suresh, for joining in.
Thank you, Tamanna, for having me.
Yeah. Let's start with the origin story of Digiatra and your own journey as well. You've not always been in the airline business. You're more in the telecom tech space, isn't it?
Yes.
Yeah.
So I started my life journey or professional life journey as a maintenance engineer. I used to repair fax machines, install trunk mobile radio systems. So primarily in the telecom industry, and then from there I moved on into various different roles, simulating equipment for networks, and then eventually I moved on to airports. So that's been my professional journey. But yes, I think when you start to look at your life, right? During my childhood days, we used to have these. Came from a very humble sort of family, right? And we used to rely on rations, and the rations used to be like, once in a fortnight or once in a month, we used to get those rations, which is rice and wheat and kerosene, for example, right? And we were in Mumbai suburbs, so these stocks used to be like, used to come once in or twice in a month. Whenever the stock would come, we would get the message and then we would run. And my mom used to tell me, go and stand in the queue immediately. So we used to run and stand in a queue. So now my point is, queues is something which I think every Indian is used to, right? And this is from my childhood days I've been seeing. And as I grew up, so application to my college, right? Again, long queue. To even collect the application form, there is a long queue. Electricity bills, we used to stand in queues to pay electricity bills. And then, of course, professionally, when I entered the airport aviation industry, again, it's the same thing, right? And this is what was something which I felt, should not be, right? I mean, why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began.
I'm just going to go back. What a fascinating idea. And think about it, it's true. Indians as a people are attuned to stand in queues from birth to death, I would say. You have to someone has to stand in a queue for your birth certificate, someone has to stand in a queue for your death certificate, for your school leaving, for any forms that you have to fill.
Yes.
Wow. And you've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digiatra?
I think it's been a long journey, right? Professionally also, it's been a long journey, and I've not done any shortcuts. It's like always, it's a gradual sort of a linear growth that has happened. And this was some time back when I was in Bangalore International Airport. We were thinking of a new terminal. And for this new terminal, we had this workshop, a 3-day workshop, where we were asked, right, to write a memorable journey experience for the passenger at the new terminal. And everything was like conceptual. in nature. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything and just boards the flight, right? And this was a concept which was based on the face as the single token. We used to call it at that time as my face is my boarding pass. And of course, easier to say than actually execute, right? Because the whole aviation industry has got disparate sort of elements, disparate sort of validations to be done, identity validation, travel document validation, many other validations which happen, right? And all these are from different ecosystems. So how do you get everything stitched together and then still make it happen and give a memorable sort of an experience? So this was a difficult task. We started off working on this with biometric vendors.
No, one second. Let's not jump that queue. So you submit this concept, but there is someone at the other end who has to look at this and say that, okay, this is something that we can actually do. This is not a flight of fancy.
Yeah.
Who's that?
Yeah. So the concept anyway, I was from the IT department, right? And this concept was put up and people were asked to vote for this also, right? We were given some limited votes, all the participants from the workshop, and we got some 6 votes, 2 of them mine and my colleague, right? So we didn't get enough number of votes also. But the whole point is that, we were all like, and at that time I would say not just Bangalore, right? All the other airports also. Indian aviation is like growing at a phenomenal pace. And everybody was looking at solutions to ease this whole process, the friction in the process, and make the airports more efficient. And I think from that perspective, I started to work on, okay, how do we make this happen, right? And since I was in IT, passenger processing was part of my sort of delivery also at that point of time. So we started to think of stitching this story together.
No, so coming back to the point, how does this become a government initiative? Because right now, Digiatra, I think 25% is owned by Airport Authorities of India. And then there are 5 or 6 other airports who also have shared.
Yes.
And it's a private company. This, a lot of people might not know, but Digiatra is a private company. But the government has allowed it to happen or facilitated it. So how was that connection made?
So first, when we conceptualized, the next step was to do a pilot, because the proof of pudding is something which is important, right? People need to actually experience it, and then I think they can make up their mind. So what we did was we said, okay, conceptually it looks good, but let's actually attempt doing it in with passengers. And we did a proof of concept in 2017, and that time it was with Jet Airways. We used to do 1 flight every day, and I used to be with the passengers right from the airport entry to the boarding gate, and I used to take their feedback, candid feedback with their consent, right? Asking them, what do you feel about this process? And there were a few passengers who said, why only 1 lane? Why only for 1 flight? Why not do it for all the lanes, and why not all airlines, and why not all airports? And that's when we started to get the ministry also involved. And at that point of time, ministry also was looking at something which can ease the passenger journey. And when we brought them to witness this whole process, they said that this has to become like the Suomoto standard for passenger processing across India. And then we got everyone together, and this was an initiative which was headed by the Secretary of Ministry of Civil Aviation. And then under the Secretary was the steering committee, which was the CEOs of various public-private partnership airports and the Chairman of Airports Authority of India. And then under them were people like me who were subject matter experts. We called ourselves as the Technical Working Committee. And we started to then do brainstorming workshops, ironing out the processes, various stakeholders, right? The security, CISF, Bureau of Civil Aviation and Security, the IB, even from a data security perspective, all these stakeholders had to be convinced that, what we are doing is something which is going to take care of all your requirements as well, while still providing a superlative passenger experience. So then I think it took almost a year plus for us to bring all the minds together and get something which is
But frankly, in the time it takes for government typically to decide something and execute something, a year is not that much time at all.
I agree.
Yeah.
Yeah.
So this is what happens when a tech-backed idea meets policy support. And that's when you see something like Digiatra you're rolling out, because you need to have the buy-in from the CRPF, you need to have buy-in from the airline, the airport, everyone, right?
So I think where we won the game was we had everything. We had a good point for all stakeholders, meaning that a value for all stakeholders. So if you look at airlines were at that point of time, right, everything is happening manual. So they would not know how many passengers entered for a particular flight, whether passengers have actually crossed security check or not. They may be at final call and they may be looking for a few passengers, right? They would get this awareness. Security, for example, if you were to look at the actual role of the CISF, looking at your documents, right, it's a very complicated sort of a thing. So we have taken away all that burden and we have said that, all these things, let it be done in a digital manner. So the identity validation happens digitally with this face-to-face match. The travel document validation happens with the airline departure control system. Everything is digital. So the pain is taken away, and then also the human error, right? And you look at today's technology, right? I mean, you can forge an identity card, you can forge a boarding pass or a travel document, and no human eye can detect, right? All that is now out. You can't forge this because you can't, the validation of your identity happens directly with your Aadhaar. So you can't cheat that. Your travel document, when you are entering the airport, your boarding pass gets validated with the airline departure control system. So again, that you can't beat or cheat. So I think from that perspective, we have taken away pain from each stakeholder, and therefore everyone is like, sold on this, and we have got people who swear by Digiatra, I would say.
But it wasn't the case right in the beginning, wasn't it? There were a lot of questions on safety. Why should I give my biometrics to a government agency? Because, this was being rolled out and the communication at the front end was from the ministry, right?
That's true.
So why should I give my details? What will my face ID be used for after this? And you had for some time that pain to convince people to adopt this.
Yeah, I think it was more about people understanding how the ecosystem is built. And we are not like the typical central identity management platform, right? There is no central identity management platform at all in Digiatra. Everything is decentralized. And the whole concept is called as self-sovereign identity, which means that you, as a holder of the data, have got complete power over where you shared the data, when you shared the data, what is the data that you shared, everything, right? It's in your control. And the other thing is it's with consent driven first, meaning that we take consent. We also tell you the purpose for what we are taking these data points. And then once that purpose is achieved, which is you crossing through the airport, then this whole data gets purged. And how do we ensure it is purged? We do certain empaneled agencies who do audit of the various airport verifiers. So from that perspective, you are reassured that none of your data is being misused. And then, yes, I do agree that, there were people who had doubts about, I mean, this is perhaps another surveillance sort of a
Correct.
thing.
And in our country right now, everything turns political.
Yeah.
So I think even the initial phases of Digiatra and the conversation was very political. That why is our face being captured and what will be done with it? Correct.
So, and I'll tell you examples, right? And I saw on Instagram, there is this one video where, this person is like, vocally, vociferously sort of, saying that, say no to Digiatra. And he is speaking. His Instagram handle has got his name, etc., etc. People know him. And he's giving a live sort of a video shoot at the airport saying that say no to Digiatra, you have a choice, etc., etc. It's not that we are forcing passengers to enroll. It is a choice that you have. And the whole ecosystem is first of its kind. And I'm actually very glad to say this, that we are the torchbearers, global torchbearers of self-sovereign identity implementation, right? And this is not done at this scale, this volume, anywhere else in the world. We've got so many other countries, continents trying to get into this sort of a process. It's a privacy by design ecosystem. And what we have tried to do is this conception or the misconception, right? We need to change. And from that perspective, we have started doing various campaigns on social media.
No, but let me come back to the point about that you don't store the data. Yes, all of the new data is erased, which would be your PNR number, what flight you're going to. But your face and the image of your face is in the database. That's how you use
so
it
it's
every
not
time.
in the database, it is in your phone, right? Meaning that, that face and your name, all the other data points are in your phone as a verifiable credential. It's in your phone in a secure wallet.
Okay, so it's
Right?
not on a cloud where someone else
It's
can
not at all.
access it.
No.
Yeah.
So we process the data. Once we create the credential, what we do is we put a signature on the credential. Now this signature is used to identify that, okay, this credential has been issued by Digiatra Foundation. So the airport verifier knows, okay, fine, this is a known issuer. Second is there is also a check on the credential, which is that if any tampering is done to this verifiable credential, we have a proof value which gets validated. So I issued a credential with this proof value, and now whatever I have got from the user is not that same credential. It's tampered. So it's a tamper evident ecosystem also. So we say it is a privacy preserving ecosystem. It's also a tamper evident ecosystem, and it's completely secure, end-to-end secure, encrypted.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency, you acted quickly on it. Tell us about that part of the journey.
So this was some time back when we decided that, okay, we need to build the Digiatra ecosystem. So before the pandemic, we had said it will be a central identity management platform. And we went ahead, rolled out an RFP, selected a partner, and once we were able to sort of place the order, pandemic hit us, right? And travel came to a standstill. And then we had to relook. We had to relook at multiple aspects, which is from the financial outgo, all those aspects we had to look at. And while we were doing that, I was also part of the IATA's One ID advisory group. And in that One ID advisory group, we were talking of self-sovereign identity and decentralized ecosystems being rolled out. So what we did was we said that, okay, while IATA keeps on setting the standards, here is something which is perhaps possible for us to deploy. And even self-sovereign identity at that time was in early nascent stage. And there were no big players who would do it. So we said, okay, let us run a startup challenge. And we ran an Indian startup challenge with the help of Atal Innovation Mission and Niti Aayog. And we ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. 1 of them went ahead and built this ecosystem. And yes, we had a parting of ways. And now we are managing it completely by ourselves.
You tell us about the parting of ways. That was the important part. जो आपने बस 3 word में बोल दिया. वो हिस्सा बताइए.
So I think for us, I think it's already something which is there in the news media. I don't want to speak much about it, but the point is that yes, this was a concept which was provided by us to the startup. In the innovation challenge itself, right? We had put up this whole concept of self-sovereign identity, W3C standards, verifiable credentials using decentralized identifiers, etc. The whole concept was put by us, and then yes, one startup built it. There were 5 others who were willing to build it for us, right? But any which ways, I think what we have now done is we have started to manage completely on our own.
Correct. No. So these hiccups are likely to happen right at the start of this kind of a journey. What is coming next is my question, because I think for anyone who's traveling on Digiatra, and this is what people say, that if you don't have checked-in luggage, it's great. If you have a carry-on bag, then you're in and out very, very quickly, maybe 15 minutes to your gate. But if you have to check in your baggage, then you're back in that same queue that we were talking about. What is the solution there?
So when we defined this whole journey, right, so it was airport entry, check-in, which is your baggage drop, and then security check, and then boarding gate, and also lounge access, for example, right? Those were all the logical progression steps. And the other was also automated border control, right? So the check-in part of your baggage, right, I think some airports have begun to do the initial trials, and where you can actually stand in front of a kiosk, print a bag tag, tag your bag, go to the self-service bag drop and drop your bag.
It'll all be on the same
everything
Digiatra
on the
platform.
same face as the single token. But this is a graduated sort of a step that is being taken by airports. Some airports have already begun doing these tests and prototypes. And very soon you will find that, even that touch point is completely
What's the
biometric.
timeline? By when do you think this becomes a reality?
I
at least
cannot,
at
at this stage, I cannot give you a timeline. But yes, I think work has already begun. Few airlines at some airports are already using it.
Mm-hmm. No, and it'll be the distinction, right? It saves the airlines also a lot of time and space to do it.
And the experience. I think for us, I think what has been the most important aspect is that everything revolves around the customer and the customer experience. We have not thought anything beyond that. For us, it has been the core. What is the customer need and how do we address it? And how do we make it simple?
So what is the progression of this use case? Because you now have this technology, you're using it in airports, and yours is a non-profit organization. It's not a government organization, but you're providing this service as a quasi-public service with the government on board on everything you're doing. Is there an extension, for example, to hotels, etc.?
I'm glad that you asked this question. Because see, when we have created this credential, it's there in your phone.
Yeah.
Today you can share it only if you have a boarding pass. It is an automated trigger, right? As soon as you upload the boarding pass, the credential gets added and shared. But why not just allow the credential to be used independently? And again, it could be a much more privacy preserving way of getting your identity validated at various places. Like it could be a hotel. So you land at a particular destination, check into a hotel. And I know you travel a lot, surely. And when you are waiting for getting checked in, right? You are waiting for that other guest to get processed, etc. It takes like 10 minutes, and that 10 minutes is a long time. You wouldn't want to wait that long. How would it be if you entered the hotel with your face? And maybe the hotel room itself, right? You could enter with your face, or you could stand in front of a kiosk and your card gets issued. And then you
What
walk
are the
in.
downsides, the risks? Honestly.
There are no downsides.
No,
Tell me.
Be objective about it.
100%
because this
objective.
is sounding like a very dystopian future.
It's not. It's happening today.
It can extend. I'm just thinking off the top of my. It can extend to advertisers. If I'm walking through a mall now, my face is being scanned, and then my phone's getting
So
bombarded.
it is you who start everything. So remember this. With Digiatra, it's you as the user who initiates every conversation. So you want to share the boarding pass to the airport. So you share the credential. You want to enter the hotel. So you share the credentials, right? It is you who initiate everything. It's not like some camera at some place captures your face and then they validate it with what? They need you to accept that validation or you to initiate the validation. So it's always you. That's the reason why it's called as self-sovereign identity. It is basically you who drive everything. It is not somebody who can just capture. That is surveillance. So if you are walking on the road and somebody captures your face and validates you with something, that is obviously surveillance, right? But we don't do that.
So the same platform you're saying as of this moment cannot be used for surveillance?
Absolutely not, because where is the credential? For surveillance, you need a central repository.
Right.
We don't have any central repository.
Okay. What does this whole system look like when you add an AI filter to it? Because that's the reality. Is that something you want to adopt? Is that something that you're worried could turn into, an opening for misuse?
So AI per se, if you were to look at it, the one thing that we use is the face match, right? Beyond that, there is nothing that we use. But you bring up a very interesting topic of AI, right? And you look at any industry for that matter, right? Airport complex industry, right? Where so many different service providers coming together to provide that one passenger a memorable journey. And different entities, right? How do they get common situational awareness? AI can help. How do you make your airside more efficient? Like, for example, a flight coming in, landing, and then which is the stand that needs to be allocated to it, which is the nearest, most efficient sort of a thing, which one will take the least taxi time. All these aspects, right? AI can help certainly enhance the efficiency of the airport operations. And this is not just airside, it's the terminal, it's the land side, right? The vehicles moving in the land side. All that flow can actually become much more efficient using AI. But for us, I think AI is more on just the face match. Beyond that, there is nothing much because we don't have we don't have a use case at all.
Yeah, no use case at least today. Thank you so much, Suresh, for coming in and speaking to us. This has been a fascinating journey, and I feel that you're just getting started with what Digiatra can do. What is the target for the adoption of Digiatra? How many passengers on it in terms of a percentage, and where do you expect that to go?
So today we crossed 15 million just a few days back. 15 million user base. We have enabled more than 60 million smiles. More than 2.5 years now. I think for us the future is more from international journey perspective. And again, in the international journey also, look at the Trusted Traveler program of any country. That program works only for that particular airport or that particular country, right? Departing from that, arriving into that country. But if you look at an ecosystem like Digiatra, you can actually share your credentials to the destination, and then when you reach the destination after a 10-hour long flight, you actually can zip through the whole process seamlessly.
That's the goal.
So that's something which we are aiming to, and then of course that's a sensitive border crossing, and therefore we'll have to deal with multiple ministries, and we have just begun those initial discussions.
Well, the future is bright and sky high. Thank you so much for speaking with us today.
Thank you, Tamanna. It's been my pleasure. Thank you.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digiatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digiatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points, and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
Hello and welcome. You're watching KYC. Today we're going to speak about a cable and wire company which has come out with numbers, and honestly it does extremely well in terms of its return ratios. It's done 20% plus over the last 5 years in terms of ROCEs, and not just that, they generally guide extremely conservatively as well and generally exceed guidance. Now some of these cable and wire companies in India are doing extremely well. Even in general, given the macro tailwind, but this one is also going to do exports. So KEI Industries is what we're going to talk about. There's been a sharp ramp up in exports in Q1 FY26. And that is not just the only trigger, frankly. And what I want to know is the first piece is competition, because you have a couple of players who are likely making large investments in cables and wires in India, given the setup that I've just given you. High ROCs, very good macro and strong tailwind, and there are maybe just 2-3 large players in the space. So the opportunity size is also quite large. But is competition a concern? One, to the industry, but also to KEI Industries. That's going to be my first question. Second one, will the 20% plus kind of ROCE number continue? Why? One, with competition coming in, could this be the new paints? Second, a fundraise. They've done a 2,000 crore rupee equity raise. And does that in some form or shape hamper the return ratios is what I'd want to understand better for FY26 and FY27 especially, because FY28 onwards probably growth will take care of that, but at least for the near term. Now, in terms of downside risk, is there a downside risk to export market? There's plenty happening on the geopolitical side, and therefore that could be one risk. Capex plan, whether that one is on track. It's a large capex that they are planning, and therefore we'll want to understand that. How quickly do capacities come on stream? Is all of that on track? Sadanand phase 1, that project should at least get done by H2 of FY26. So want to understand whether that is on track. Margins on export versus domestic, this I'd want to know, because they're shifting base towards exports in a big fashion. Now their export is around 13% of the mix. That will likely continue to inch higher. The aspiration is to get to 20% in the next couple of years. If export is going to do well, and if margins are better there, you could well see a margin upside from here. But there's a margin downside. Raw material prices is a key risk. For the moment, they've been able to hedge raw material prices, pass it through to the customer, but is that at all a risk going forward? Cash flow in FY25 was a concern. They reduced the number of or the amount of payables they had because of the large cash balances that they held. Well, is that likely to reverse at some point is what I would want to understand. Will they go back to increasing payables, and therefore will there be an unwind at some point of that large cash flow that went out from operations in FY25? So some of these I'd want to know better. But let's quickly understand the company, and Puneet will join me shortly with regard to this. It was founded in 1968. It's been public since 1992. It's the second largest cables and wires company in India. It commands around a 9% market share in India. They intend to rigorously defend that market share is part of the commentary that we've got. Supplies to infra, power, industry, real estate, exports and retail. So across the board, it has a pan-India presence and it has a growing global presence with 60 plus countries is what it is present in. Let's look at some of the products, and we'll quickly have that in one slide maybe. Okay, so let's look at revenue distribution first. Okay, 94% is from cables and wires. EPC has come down sharply to 4% now, and stainless steel wires is 2%. EPC at one point was late teens. In fact, not too long ago, maybe FY18 or FY19 was a large chunk of the top line, maybe 18 to 20%. Now it's just down to 4%. They are granularizing their top line more, and that granularity is giving them margin tailwind. So all of that has started to play out. Let's look at the revenue mix as well, and within that mix, retail is now 52, institutional is 48. That allows for better margin upside because retail will always give you better margins, the B2C. Now let's look at products, and let's pull up that slide, and that will give you a full picture of all the products they do. Largely into almost every product within the cables and wire space. So it has a large plethora of products. Wherever they don't have an R&D or they don't have a specialization, they have tie-ups. And that kind of helps, especially in the EHV cables, where some of the higher kilovoltage cables is where they have a tie-up. So well, that too is likely to drive numbers. When I'm looking at customers, retail customers through distributors is what they tap into. They currently have around 2,100 dealers and they do both international as well as domestic. I did speak about the mix. Around 13% is what the international mix number currently stands at. In terms of value chain, they do manufacturing, warehousing, B2B and B2C, and thereafter also exports if at all. Now, they manufacture through 6 plants. One is in Rajasthan, Silvassa, Sanand. We spoke about the Sanand plant and the capex that it's going through. It sells via dealers, which is B2C. They also do direct to industries and governments, which is B2B. They do exports. 52% is retail, 35% is institutional, and 13% currently sits in that exports basket. Raw material is largely commodity driven, and it follows pass-through pricing, and therefore you'll see very, very limited impact on margins is what the management has guided for very, very comfortably. But that's the holistic picture with regard to what KEI Industries does. Let's get into the metrics now, and let's start off with the metrics themselves: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of those 8. And as always, Puneet joining me for that analysis. Puneet, let's start with the income statement.
Well, definitely, Harsh. And the key aspect is the strong growth in revenue that we've seen for the KEI Industries over the last 2 to 3 years. So it's definitely grown steadily, and post the slight dip in which we've seen post the pandemic, it has recovered very well. Like the other cables and wire companies, we've seen a 19% CAGR in terms of revenue. EBITDA has grown in line with a similar percentage. It's very difficult to do that because it's a very highly commoditized industry. Copper prices are very volatile, and we saw that impact post the pandemic as well. But company has been able to maintain that margins. Slight blip which we saw in FY25, and is expected to be around 11 to 12% in this year as well as the coming year as well. So that'll be something to watch out for. But that's driven by the profitability growth of 23%. So we've given this a thumbs up. No two ways about it. It's been a strong product profile over the last 3 years, and that's reflected in the growth in revenue as well as profits as well.
Okay, so that's with regard to the income statement. You can see the journey. Do we have maybe a 3-year or 5-year chart with regard to how the income statement, margins, etc. have moved? Let's pull that one up as well. That'll give our viewers better perspective on how the top line, the margins, as well as the PAT has moved. Okay, let's quickly move on to the balance sheet. And in that balance sheet, if you see the way in which your equity has moved, it's inched higher because of the 2,000 crore fundraise that happened in November of 2024. The other equity number also rising significantly as a result of, one, the strong profitability that we saw in FY25, but also as a result of that fundraise. So both of those reflecting on the book value currently, which is sitting at sub 6,000 crore. It's a 38,000 crore market cap company. Just something to keep in mind. The borrowing number is at around 178 crore, so fairly healthy balance sheet. They've repaid some part of their borrowing, post the fundraise, and the cash bank balance currently sits just below 2,000 crore at the end of FY25. Of course, the Q1 numbers still need to get adjusted in the balance sheet. We don't get that disclosure. So broadly, it's a thumbs up. No question, no worries with regard to how the balance sheet looks at the end of FY25. Cash flow, Puneet.
Well, cash flow is very interesting because we've seen a slight impact in FY25 numbers, and that's largely because of what's happened. In terms of operating cash flow, it's visible that FY25 was only negative 32 crores, while over the last couple of years it's been above 500 crores of cash generation from operations. Now that was impacted due to working capital changes. Inventory has moved up to over 390 crores, and that's largely because of the volatile copper prices that we've seen the last year. So the company did go out to have higher inventory of copper. It's similar to what they did in 2022 as well. At that time as well, the copper price and the inventory was over 300 crores for the company. Because of that, there's been a delay in receivables as well as payables as well. So we've seen that impact happening on the company's cash flow to EBITDA ratio as well. but largely this should be solved into this year, because we've seen that within copper prices, it is still at a high, but the companies are managing their way into maintaining their inventory of copper in this particular quarter. So it will be something that we can quiz the management on as well. But largely we've given this a neutral rating because of what's happened in FY25. FY22 to 24, this was largely stable in the metrics that you can see on your screen. But hence, the cash flow to EBITDA conversion was delayed because of working capital impact.
Okay, so that's with regard to the cash flow. We've given that a neutral. We want to see how quickly that unwinds. We spoke about that as well. Let me talk about return ratios. They've been consistently above the 20% mark. No concern there. Not going to discuss this too much. Going to give this a thumbs up and quickly move on to shareholding, Puneet.
Well, shareholding as well, largely been stable. We've seen the promoters maintain the 35% stake over the last couple of years as well. So we've seen a slight increase, and you can see that in the from what happened with domestic investors as well. In FY24, we did see some selling, and that could be one of the key reasons why we've seen an increase of that to 20%. But even from those levels, we've gone back to 26% of ownership from domestic individual investors. This includes all mutual funds amongst HNI investors as well. So we're seeing that kind of positive impact. For the public, there's been some kind of selling, but that's largely because the stock has also done so well in the last 5 years. But overall, we've given this again a thumbs up, stable ownership by the management, maintaining that kind of view in terms of the strength towards the business, and hence giving this a thumbs up as well.
Yeah, we track number of shareholders as well. That's reflecting on your screen. See how the number of shareholders have inched higher. Let's look at street cred now. 1 month, 6 month, year to date, 1 year. You look at the performance, it's been okay. It's been a flattish kind of a move over the last year or so, plus minus 12%. But you look at the 5-year picture, and that's where you will really see the kicker. It's been an 11 bagger over the last 5 years. So some real solid tailwind. And that performance is reflecting on the income statement, very, very frankly. So it's not a surprise to see the kind of compounding that we've seen. It's been a PE multiple re-rating that's happened. And you've seen very, very strong tailwind even in terms of growth. So both of those are playing out as we speak. But talking about valuations, Puneet.
And, in terms of valuations now, it's important to look at the relative valuation of the other peers as well, because while KEI Industries is trading at 35 times price to earnings for FY27 would seem expensive. When you look at the other players as well, they are valued very well as well. For someone like a Polycab, it is the market leader, has 26% market share, but maintaining that kind of valuation. And we've seen over the last 2 to 3 years, for KEI Industries, it has now become, in terms of valuation, on par with someone like a Polycab. It was always the second largest player, but we've seen that kind of valuation in terms of KEI to be maintained at 35x. Let's also look at the other players like Havels as well as, in terms of Finolex. And for Finolex, we see that valuation discount largely because of the company's slow growth. So the market not rewarding as effectively as someone like a Polycab and KEI. And for Havels, we've given this a comparison. But for Havels, there's also the consumer discretionary and the AC business that takes a higher valuation, and hence at 48 times. The wires and the cables is one part of that business now. So for Polycab as well as KEI, we've seen that inch up. For RR Cables, it was a stock which was trading around 24 to 25 times before the last couple of quarters. Seen that inch up as well. So a high growth industry with industry leaders and players participating very well. So we've still given this neutral only because of the higher number, but the growth aspirations of the company to have till FY30 is what they mentioned as well is very, very high. So we have to look at that aspect with the growth coming in. The market is hence okay to give us a slight premium to someone like a KEI Industries.
Absolutely. So that's the take with regard to valuations. And quickly on to what analysts are saying about this one. 18 buy calls, 4 holds, no sells, 1.5% upside. So the upside in that sense seems capped, which is why we've given this a neutral. Chairman, Managing Director, KEI Industries, to talk to us about, one, the quarter gone by, but overall, the big picture as well. Mr. Gupta, you set this up from scratch. You joined this place in 1979. What is your take with regard to incoming competition? You have a fantastic grip on the business as well as on the industry. Give us your honest take.
Good morning.
Good morning, sir.
I think that we have established ourselves very strongly in this business. We know the business, how it is to be run in all fronts. So I agree that some big players are have announced their entry in this space, but the market is substantially growing. Economy is growing, and I think there will be a space for one or two large players to come in. Will not much make difference to us. We know how to diversify our product portfolio and diversify our markets and market geographies. So, even if we have to face competition in domestically a little bit, we will cover it up from other geographies for the growth purposes. But I'm sure that we will be able to maintain our market share and even grow our market share domestically as well.
Mr. Gupta, a very good morning to you. Thanks so much for joining in. It's Puneet this side. I just wanted to take a couple of questions on the new Sanand facility that's coming up, and you've given a very detailed outlook in the past as well. But on phase 1 specifically, you will have the low tension as well as the high tension cables coming in. In that context, what is that expected to do for KEI in the medium term? Because you've given a strong guidance till FY30 for about 20% revenue growth. So essentially, with the phase 1 coming in, how do you expect that to benefit KEI? Because there is some competition in this particular segments as well. So how would you be catering to that?
See, our phase 1 of this project is likely to be operational by September 25, and full project will be operational. So phase 2 will be operational by end of first quarter of FY27. But about the competition, I think the demand of our products is quite significant. We are actually, struggling to meet the orders timelines because of the capacity constraints. And a lot of international customers are waiting for us to start catering to them. We have a little bit slowdown on our export customers because I don't want to lose our domestic market as well. So as soon as our capacities come up, we will full-fledged go for the grabbing the market in domestically as well as international.
So what is the margin picture like, domestic versus international? Do you enjoy far better margins internationally? That's my first question, and let me wrap a second question along with it. What helps you stand out internationally? So you're in 60 plus countries, you're growing market share, you've guided 20% of your revenue coming in from global. So give us that picture.
See, first is that we are going all the way out to get, product certification in different countries. Product certification in electrical industry is a must, and we must comply with the technical standards prevailing in that country. So we have to, like in India, BIS. Similarly, in most countries, they have their standard body, and we have to obtain country-specific approvals. That is one thing. And all these things takes effort and cost money, and also the backup manpower who can handle all these aspects. Secondly, the creating agent network and other marketing network to handle different geographies. So and also making our product compliant to that, including customer audits, including specific specific audits like ISO type, which customers do. So these are the things which we have done correctly in last few years, which has enabled us to get into different markets.
Mr. Gupta, in terms of exports and continuing with the part that you mentioned that you'll have to obtain these certifications and once you get that, you'll be able to supply those products. You mentioned that roughly about 13% is coming from there. You're looking to 17 to 18% of revenue from exports very, very shortly. So in terms of the advantage to you, will it also be twofold that because of Sanand coming in, you'll have those kind of products to cater to the export market as well as have the cost advantage versus the players who are in these export markets? Will that be a right assessment?
Yeah, because in Sanand, we will be closer to the seaports. So our logistic costs of inward and outward freight should go down. So that, and also the time required to ship our goods will also go down. So that will be beneficial because in exports, the customer needs the material. They give very short time to manufacture, and you need to have capacities to cater to large orders. And that is why large capacity and proximity to the port is always beneficial.
And just one question on your second phase of Sanand that, as you mentioned, you will have the high voltage cables, HVDC as well as EHV cables coming in. Will this be higher margin compared to the current 10 to 11% that you do, or will it be largely in terms of product? I'm asking, not for export specifically. In terms of product profile, do you think that will have just slightly higher margins compared to the current margins of 10 to 11% that you operate in?
Yes, they will be having higher margins compared to current products. And but also they will, they take little longer time to even after the production comes, then we quickly have to go for type test and other product certifications of the factory.
Would it be materially higher? And sir, export margins also, are they materially higher?
Yes, a little bit higher. And I can't quantify, but definitely they are better.
Got it, sir. Sir, this cash flow unwind that's happened in, or rather cash flow wind up that's happened in FY25, you're obviously sitting on surplus cash, so it makes sense. Does it at some point unwind, sir, as the capex goes through fully? Is that how you visualize it? How should one see it?
See, cash flows will always be, changing. Because as the new capacities comes up, then we will be pumping a lot of money into the working capital. And so the one way is that we, fund the working capital by debt. Or the other way is that if we have the cash flow, then we are using our cash flows to fund the working capital. So the visibility of cash flow will be there, but either in terms of stocks or debtors or in terms of free cash flow.
Okay. Sir, thank you so much for coming and speaking with us. We'll let you go on that note and, wishing you all the very best, of course, for the rest of FY26 and beyond. Viewers, it's obviously an interesting company, and let's again pull up the ratings one more time.